Right. Hello, everybody. Welcome back to another episode of The Market Close. We are live. It has been quite the day, and there is a lot to get into. We have some earnings that we will have after the bell that we are going to get into. We also have a variety of updates in regards to the macro. Some of this stuff is good. Some of this stuff is not the best. Obviously, I think everyone has seen what has happened with bond yields today, which is part of the reason why I think we are getting the level of ugliness that we're seeing right here pretty much across the board. I mean, honestly, nothing has been safe today. The S&P 500 right there, 767.74. It's down about 0.64%. So you've got a little bit of relief from where it was at the absolute lows of the day, but still pretty much down with that 0.5%. Meta, ugly day. We'll talk about it. That is down 4%. The semis kind of fell off a cliff. I mean, they were down during the market open, but they started to really go down throughout the end of the day. Amcor right there down 10%. Micron, 7% swing to the downside right here. Uber's was up 2%. Now it's down 0.5%. Even some of your kind of recessionary proof names like the Ubers, the Netflix of the world ended up feeling a little bit of pain, even though they were up on the day. Nebius down 7%, even after the data center agreement in New Jersey went through. SanDisk down 9% after that was up 30% over the past week. SoFi down 3%. Fastly, which was up at $29 today, down 8%. Cerebras down 12%. Bloom down 10%. AppLovin down another 1%. It was just an ugly day across the board for pretty much every sector, hyperscalers and semis. The semis just ended up getting it the worst. S&P 500 right there, 767, as that was red on the day. There's a couple of reasons for why I think we're getting this red. We will have Technical Tuesday with Jason in about 30 minutes, and he'll be onto the show, and we'll get his kind of take on what's happening from a TA perspective. But I think the real story today, and let me know in the chat if anyone bought anything. The only thing I bought, and I did it live on the market open, was Broadcom at 377. Just kind of felt like as a large cap semi, it didn't really deserve to get a hit from 420 over the past 2 days that it's been taking a hit. Outside of that, no other crazy buys. 4.7 on the US 10-year. You're seeing a lot more people start talking about these bond yields. Japan's bond yield started to go a bit crazy. I know these kind of concerns are very macro and abstract when we talk about like the cost of credit and bond yields, but it's one of those things where the VIX was at basically a 2-year low. Stocks were at all-time highs, VIX up 3% on the day, and bond yields were pushing levels that we didn't have since April 2025. And last time we had those levels, you know, things were pretty ugly for equity. So at some point, it was almost like the market had to wake up and remember that the cost of financing the country is a little expensive. And if we're going to finance the country in a way that is now making these yields competitive with what the hyperscalers are paying on their corporate debt, which is another issue that, you know, enters into the picture when you have high bond yields, then yeah, we're going to have some pain. And right now we are seeing that pain on the equity markets. On top of that, you had the first 2 weeks of August that were incredible. Last 2 weeks of August going into September tend to not be the best. Last year, I think, was a bit of an anomaly where August and September were amazing. Maybe this is just a one-day thing and we go back to having a good August like we did last year. But the oil spikes are not helping. Trump basically refusing to acknowledge any level of an agreement with Iran is also not helping. Bond yields aren't helping. So what do you get? You're going to get equities that take a bit of a hit, people taking some profits, and I think that's what we're seeing right now. I see some people saying they bought CoreWeave, some people saying they bought Meta. Oil right there, 84.50. That continues to go up on the day. I see a couple of people saying they bought Broadcom. Some of the highest beta momentum names. Look, here's the thing today. Either they're all falling knives and there's going to be a much better opportunity in the coming days, which again, if these bond yields don't relax, then I think that is true. Or this is a one-day kind of sell-off that will easily get resolved when Trump says something that the market likes, etc. And, you know, we're going back up the way that they were. I think a lot of these names you can put into that bucket, Bloom, Micron, Nebius, where, you know, if we do start seeing some more pain, they're going to go down further and there's going to be better opportunities. You can even put NVIDIA in that bucket to an extent because it moves with them down 2.4%. But, you know, down 8 to 9% is definitely a hefty drawdown. It's not something small. It's something that you have to be used to if you're going to be an investor in any of those companies. Intel as well got hit today from 100 to 95. I just wonder how aggressive today's price action is in comparison to the rising yields. And if Trump says something tomorrow and yields get back down to 4.65, do these names all just rip tomorrow like this sell-off didn't even happen? I mean, I really think it's one or two of those possibilities. Either they continue to fall down simply because of the fact that once they get into that high beta momentum sell-off, they continue to really sell off, which is what you're seeing with SanDisk today, even though it's up 60% from the lows. Or you have Trump come in and save the day, which he has not given any indication that he's trying to do yet. So I think you got to be kind of selective here. That's part of the reason I bought a large cap today. I am not buying any of the super high beta momentum names because I want to give it a day, or at least, I think the rule is rather 3 days once a sell-off starts and see where do they end up. Whereas the large cap semis, like, I don't know. I don't think, when you're trading at that many trillions of market cap, 4 or 5% down tends to be a dip buy. If it's down 15%, like Broadcom is from last Friday, it tends to be a bit more exciting because these names don't fall 20, 30% that easily, unless you're Meta. If you're Meta, you fall 20% like it's no problem. Whereas some of the other names can fall 20% in a day. So I think the question here is going to be, what does tomorrow hold? And if this market can get any level of a rebound. Software getting somewhat of a green look right here. IGV gapping up a little bit. Netflix, that's up 2% after being up 4%. Duolingo, that's up 7% on the day. That one having the best day after getting an upgrade. Bitcoin right there at 64,649. Why is Bitcoin getting a move? Well, we got somewhat of an update on this Clarity Act, even though we're not officially getting the Clarity Act passed. The SEC today announced a new framework for proposed rules that will create a clear and fit for purpose framework for certain investment contracts involving crypto assets. Here are the details. The proposal will be following the March 2026 interpretation, clarifying how federal security laws apply to certain crypto assets. The rules will address long-standing barriers to capital formation and innovation. The proposed rules include 2 exemptions from the registration requirements of the Securities Act of 1933, specifically tailored to certain investment contracts. And the proposed rules also include a conditional safe harbor from the term investment contract and the definition of security from that same act in 1933. I think this is really interesting because although you don't have a ton of clarity on what an asset class will be subject to when it comes to regulations, Rocket Lab falling 3.84% right there. When it comes to the crypto industry, which is kind of the whole point of the Clarity Act, to get a little bit more of what that standard would look like. Robinhood also getting hit, about to lose 92. You at least have the SEC trying to set up some guidelines. And those guidelines would be, even if not officially in place, at least somewhat of a framework for the market to, have something to interpret when it comes to better legislation for crypto. So, maybe that gave Bitcoin a little bit of love right there. It was stuck at 63 for the majority of the day, bounced up to 65, now it's 64.6. But in general, still a pretty ugly day. You're right. Webull earnings are not today. I thought today was Wednesday. Today is Thursday or Tuesday. We actually don't have any earnings today after the bell. We have Keysight Technologies and Toll Brothers, but outside of that, nothing too crazy. That is fair. Okay, so tomorrow we will take a look at Webull earnings. But today, this is what we got. Meta, is that a buy the dip or a falling knife? I think Meta is a falling knife right now. And the reason for why is because this trial is going to last for another, the trial is going to last for another 7 weeks. And unfortunately, if there's any bad headlines now Meta's cheap enough where any good headlines can change it, but any bad headlines, I don't know, man. It feels like it's tough to be excited to buy here, given we got 7 weeks of this coming up. Here's some more coverage on what happened today with the closing or with the opening arguments from Meta.
Now underway inside a California courtroom. Julia Borston joins us now with the very latest. Hi there.
Hi, that's right, Scott. At a federal courthouse in Oakland, the attorney representing Meta, Paul Schmidt, just laid out Meta's defense, saying that Meta works to improve its policies. And he asked the jury to consider whether Meta's features, like the ability to have multiple accounts, its time management tools, and its effort to block users under age 13 are unfair. This after this morning, the lawyer representing the state suing Meta, Megan O'Neill, said Meta prioritizes profits over the safety of children, and that Meta's financial success depends on keeping kids on its apps, and that it knowingly developed features to take advantage of them. Now, the 29 states involved in the lawsuit are asking for Meta to pay monetary damages and also for changes to its business practices, including the likes of infinite scroll and autoplay videos. Now, that's what makes this trial the biggest and most impactful yet. Unlike the personal injury trial this spring in Los Angeles and the trial in New Mexico, which focused on whether Meta violated state consumer protection laws and enabled child sexual exploitation, this lawsuit attacks Meta's design as addictive, and it's doing so on a federal level. So this is considered a bellwether for a consolidation of lawsuits. So a loss here could pressure Meta to settle remaining cases around the country. Scott?
Is that, Julia, why the number of potential damages? I've seen reports of potentially of $1.4 trillion being tossed about.
Yeah, that's right. So Meta said that the states are looking for as much as $1.4 trillion in damages. But then the attorneys representing the state said, no, we're actually looking for more like $200 billion in damages. And Meta effectively, they said Meta was exaggerating in order to get attention. So there's certainly a lot of debate about this number. $200 billion is a lot, though not as much as the $1.4 trillion that is close to Meta's market cap. But what's important here is that these states really want to address the core of the issue. It's not just that they want those damages paid, but they also want to see changes to the algorithm that makes Meta so successful. And they would say changes that would benefit kids and teens. Meta is saying we're following the laws, we're abiding by the laws, the likes of the Children Online Privacy Protection Act. And they say they're making a valiant effort to protect kids on the platform. And that's what we're going to hear play out in court over the next 7 weeks.
Interesting.
So that's the issue. You've got 7 weeks of these headlines that I think could be very ugly for Meta in a variety of perspectives. Probably would make the stock relatively cheap if it were to fall another 10% from here, just given the earnings growth. But, you know, if it comes down to like getting a decent price on this right now, it's just tough to buy into the following night. There's not a catalyst that I think switches this Meta situation until the 7 weeks is over. Same exact situation for Google until their trial was over, which took about 7 months. Really in October is when things changed and, you know, they were able to start going up. Meta right there down 4.5% on the day, unfortunately, 543. The other Max 7s didn't have the best day. Google relatively flat, 344. Amazon 259, losing 260. Tesla was at 340 at one point in the day. It came down to 336. NVIDIA, something interesting happened today in regards to NVIDIA. NVIDIA's down 2.3% with the rest of the semis, but there is a startup. I don't know if you guys know this company. It's called Etched. I did not know about them. I learned about them today. These guys just raised at a $21 billion valuation. $700 million from Jane Street, Kleiner Perkins, Sequoia, A16Z. I read a bunch about them today. They make chips for inference. And, you know, it's one of those things where I don't know how much the market cares about this, but they've recruited 400 employees. Almost half of those employees are ex-NVIDIA. And it was kind of crazy. The article was like, they gave the ex-NVIDIA employees an offer. NVIDIA gave them a better counter offer, and NVIDIA has like an unlimited checkbook, and they still took the startup deal over going back to NVIDIA, even with a juiced up offer. So, I mean, I don't know if the market's thinking, okay, is there a new kid on the block and there's more competition for NVIDIA? Now, again, 21 billion compared to NVIDIA's 5 trillion is nothing, but you know, you do have more chip companies going out there, which is bullish semis in general. It's just one of those things like, what does that mean for NVIDIA, Cerebras, et cetera? And I think we're going to learn a lot more about them. But if you can raise 21 billion in the private markets, then obviously there's a lot of money in the public names for these semis as well. Tuesday, August 18th, 4 p.m., the stock market is now closed. All right, we are done for one of the ugliest days in August so far, which is not saying a lot given August has had a lot of green days. S&P down 0.7% is not necessarily ugly, but it led to a lot of bleeding across the entire board. CoreWeave, which was nasty, lost the entire earnings pump, 12%. Nebius did not lose the entire earnings pump, but obviously still lost a decent chunk of it, down 7.6% today. It's still up about 20% from the earnings. Robinhood 91.53, that was down 5%. We stopped the bleeding, at least for now, until the after hours creates some more red if we get any random headlines. SpaceX was down about 2% today. SpaceX tried to break out at 146, I think, today, and it just kept getting rejected. Ended up falling about 2%. Amcor, ugly day, down 11%. Micron, down 7%. Micron got to the low 930s at one point. Microsoft ended up flat at 41 as that was slightly green. Keel, pretty ugly, 16% on the day. All your neo clouds, Iren, 7%. This was up almost at 50 in the pre-market. I mean, a lot of these names just reversed in a pretty nasty way as soon as, you know, it was obvious that the semis were going down. Zeta, down about 2%. ServiceNow down about 1.5%. Coherent down 13%. Your photonics names got hit as well. They were doing great yesterday, not so great today. AAOI down 15%. Lumentum down 9.8%. Your software names also weren't that much better, but they at least weren't necessarily down to the extent that some of the semiconductor names were down. Credo right there down about 13%. Applied Digital was down 9%. Celsius down about 0.5%. Then Salesforce actually up 2.7% on the day, down a little bit after hours. ASML was also down 4%. Yes, we will have a technical Tuesday. Jason will be on in just a little bit. But overall, I think if we were to sum up the reasons for why we are red today, nothing is really fundamental around the AI story. I mean, we've had enough of those AI bubble headlines over the past couple of weeks. This private company that raised money, if anything, is good for AI because it shows that there's more companies that can develop chips. The other thing that's interesting about this company is it usually takes 2 years to develop a chip that is competitive enough to be sold into an environment like Jane Street. Jane Street is the backer of the Series D round and their first customer. It took this company 6 months. The name is etched. So I'm going to do a lot more research on these guys and figure out how they're scaling as fast as they are doing. But they are, right? Which is good for the semis because they're going to need a lot of memory, a lot of chips, all that stuff. It's just one of those things where now you have more competitors in the marketplace. And obviously these competitors are going to try to continue generating a profit via these chips. VIX was at a 2-year low. I think that's part of the reason we went down today. Any level of volatility was going to take stocks down. The 10-year above 4.7, 30 years at 5.3 wasn't really sustainable. That also got us hit. Japanese 30-year yields above 4%, highest in history, not the best. Trump, again, posting today that we're not talking with Iran. There was a report that Trump is actually talking to Iran, but he just doesn't want to announce it. We're going to find out if that's the case, but this is what he said today. He said the Hormuz Strait is open and operating, even though technically it's not. The naval blockade is operating, and there are no scheduled talks with Iran, so that's creating some more uncertainty. And then obviously tech names had a really solid first 2 weeks in August, and they're giving some of that pain back. So it's interesting. There's a variety of headlines here to kind of navigate, but at its core, I don't think it's an earnings AI bubble story for the sell-off. That was July. By the way, the Wall Street Journal did some more investigative reporting on situational awareness. This dude, Leopold, had bought some crazy options. They were called flex options. I don't even know what a flex option is. And that's probably because I'm not managing $50 billion. But when you're managing that type of money, you can buy these like really interesting financial instruments. And so he ended up getting himself into like these crazy derivative contracts around Bloom and SanDisk and Micron. And, you know, when the leverage came in, it just boiled up and it didn't end up working. But, July was the story of an AI sell-off. I mean, this startup that raised $700 million at a $21 billion, like $21 billion is usually a public company. $21 billion valuation in the private markets means it's not about AI being a bubble. You've got all these companies getting ready to invest even more money in these startups that think they can take on Cerebras and NVIDIA and AMD and Broadcom. Like, it's not a bubble narrative today. It's a rate cut, rate hike, bond yield narrative, which is creating a lot more pain. And I think that pain is, part of why we're seeing some of the sell-off that we hit today. Who takes the other side? Apparently it's market makers. Just like, usually a market maker takes the other side if you buy a call or sell a put or something on regular brokerage. Bill Ackman did something like this where he bought calls on Nike 3 years out. Usually a call is 2 years out, but if you're managing a lot of money, they give you certain financial instruments. He ended up closing those calls and selling out of Nike a while ago. But he was levered up is the point aggressively on these names. And that's why you're seeing some of the pain. Let's hear from Adam Parker on some of his thoughts on these bond yields. And then we will get right into Technical Tuesday.
Fed communication, more focus on the deficit and debt and things like that. Is this really about growth prospects? Because the most recent economic data doesn't actually scream like, hey, rip-roaring economy.
I think the economy is in pretty good shape. I mean, look, I guess the challenge always has been, if you would ask me once a year for the last 15 years, am I worried about U.S. government deficit? Or sometimes the way you ask it, are you at all worried?
Yeah.
And then I feel it ages like milk if I say no, right? But the question is like, should I change my portfolio positioning today for the inevitability that finally matters?
White fiber is down 15%. They just diluted by 250 million. 250 million of convertible notes. That's why white fiber is down 15% right now after hours.
Matters right now when it's been obvious for 15 years? I don't think so. I think ultimately the economy is strong enough. I think the earnings and cash flows from these big companies are strong enough that they'll power through any kind of scare that happens around this. One of the things I learned in the past is whenever you see people make the argument that bond yields will back up because demand will be weak, they're wrong. That's happened 0 of the last 100 times that I've heard that call from the big bulge bracket firms, because when people get afraid and there's truly a growth scare, then the 10-year yield goes lower again. So right. I'm not that worried about that. I think this is more positioning and a little bit short-term profit taking after a pretty big rip from lows in some of the tech stocks.
Okay, so
not a longer signal.
Which is what I agree with as well. I don't think it's a longer signal for the sell-off we're seeing today. It's more so a question of the short-term positioning. that is being caused by the massive run-up we've had, but also by these yields going higher. Paul, thanks for the super chat. What do you think of Anthropic's miss of the whisper number of their revenue run rate? We talked about this in the morning. The street wanted 75 billion. They came in at 65 billion, which, you know, well, it's 10 billion between friends. But then again, if you have to go public, you know, and it's 10 billion less than expected, you know, maybe the street gets a little concerned about, are you just trying to get the numbers to be juiced up in order for us to give you a nice juicy valuation when we don't even fully know if your tokens are profitable? The S1 will solve all these concerns, whether it's 50 billion, 60 billion, 70 billion. If they're profitable tokens, like Gavin Baker is saying, we'll find out in the S1, and the street will happily pay 2 trillion for a company that's growing 500% year over year at 60, 70 billion ARR. But we got to see the numbers. And I think that's the most important thing. Then on top of that, you had Sam Altman come out today and said, we have paused some of our frontier RL training to ensure that we meet the appropriate alignment, security, and monitoring standards for the new level of capabilities in front of us. Model progress is now extremely rapid, and we always said we would take action if we felt that model capabilities were outstripping the pace of safety and alignment. I think there's two perspectives to this. Number one, Sam Altman is being ethical and saying that we have to wait to train these models in a safe way, because, you know, we need to make sure that we are aligned with the heuristics of how we think AI models should adopt and exist for, which I think is fair. The problem is, when has Sam Altman ever really cared about safety? So I think a lot of people are reading this as he doesn't have enough compute. That's the actual reason why they're pausing. I mean, when is OpenAI paused training for safety? You know, like it's one of those things where if Anthropic said that, I would say, okay, maybe. But even Anthropic, they probably just wouldn't release the model. They wouldn't pause the training. So that's interesting. It's like, all right, do you actually have the data centers that you need to stand up to be able to train these models? Or are you going down the route that, you know, we're not fully aligned from a safety perspective, therefore we're pausing? Time will tell. I think that created a little bit more volatility. Tweeted that at around 2:30 p.m. and you saw semis take a little bit more of a dip right there. White fiber down 16% after hours as that's taking a hit. And so you just had a bunch of junk in the system today with bond yields, Trump comments, oil going up, semi sentiment going down. Put all that together, you end up having a relatively red day. Having said that, it's important to understand some of the technicals to get the perspective on how this red day is turning out, and if this red day theoretically could turn into more red days. And in order to do that, it is time to once again roll the intro. What's up? You're live and you're on mute. You are indeed muted. Someone said the intro is cringe. The intro is not cringe. It's an amazing intro. I still can't hear you. Look at this guy. So professional. Has 2 kids. Forgets how to do Technical Tuesday. We can't hear you. Nope.
Wait.
L Jason in the chat. There he is. Okay, you're back. No, W Jason in the chat. He's good. No, you're gone again. Dude, you were there for like 2 seconds.
Am I here? No.
There you go. Now you're good. You're good.
Stop it.
Little technical problem for technical.
I can't see. For whatever reason, I can't see the microphone.
No, you're good. We can hear you.
Are you sure?
Yeah.
Are we in?
Dude, right. The market's red. Your mic's not working. What is going on today, man?
You know, guys, I'll just let you know. Amit actually muted me that whole time. He does. He'd be like that sometimes.
That would be funny.
Am I actually working now? This microphone is, or I have been having a little bit of some.
It actually sounds more crisp than is that a new mic?
No. But I was tweaking with the settings really, because I noticed that there's like a little. I don't know if it's a threshold. I need an audio engineer. Yeah, Amit guy's always trolling Jason. Just Amit's a big troll. We love him, but yeah, it's. I think it's the soundboard.
Okay, so let's get right into it. Obviously, you got a lot of people that are curious, given it's the first red day we've had in the first couple weeks.
Tommy B, reach out to me on Twitter, please. For real. Or whoever can help me on Twitter. DMs open.
We actually have the same mic.
It's not the mic. It's I got a Rodecaster Duo Pro mixer thing. It's tweaky settings.
All right. Yeah, let's get into it. I think we'll start with S&P. I'm really curious on your perspective just on how the technicals play. I'm also curious if you think there's any real TA that's going on the indices, because it's not really that volatile. I mean, down 0.7% is whatever, but
there's definitely TA. Before I share my screen, do you remember we were in right before we did basis points? I think we were walking in. I don't remember, but we were talking about, if you really wanted to look at something, it'd be like the 30-year bond.
Yes. Yes.
And it's funny because it's all the time. It's like these ideas come in and then 2 weeks later, you're like, oh crap. Okay. Well, here we are. And I don't know. I think this is it's before the charts. It's my fundamental view. Today I woke up. It was one of those, I woke up a little bit late because the new man, for any of the new dads out there or any parents out there with newborns, I forgot the 2 hour, every 2 to 3 hour feeding time is it's a real thing. So every 2 to 3 hours, you're waking up for 45 minutes and mom's absolutely knackered right now. So I'm trying to take over a little bit, but dude, hard to get some actual sleep.
Yeah, I would imagine you're not sleeping a lot at all right now.
It's bad. But we were talking about this bond, and historically, I think it would be a really big deal. And I say that in the old market. I just don't think that we're in the old regime anymore. And especially, so I think that that's what we're seeing from a headline perspective is yeah, you know what? This 30-year bond thing, it's been here for a while. It's not a new thing. I think, for the last month or two, it's something that you coulda, shoulda, woulda wanted to pay attention to. But my stance then and now is you know what? If you actually look into this, the crazy part is that the Fed and the broader bond market, you know who the biggest, one of the biggest components today in the bond market is actually corporations. So when we look at things like Google issuing 100-year bonds or whatever, and the Meta bonds and the Microsoft bonds, this is not the same market of our forefathers, right? It's not your grandpa's market. So a 30-year bond to me, yes, it's something that historically in the past would have been a big thing, but today it's not as big of a thing because the government and this normal issuer, the normal issuer is not as big as it used to be, and it's actually becoming smaller and smaller as large corporations issue more and more debt for whatever they want, because at this point they get to decide what the debt, what the interest rate is if they can go to the capital markets. And I think that their ability to do that is what really matters. The caveat to that is what's different also is that puts us in a very funky situation where we're now kind of dependent on the hyperscalers, if you will, for the bond market. The hyperscalers now start to control more of the bond market than they ever have in the past.
Right.
The hyperscalers also are a massive part of the stock market, so that we're also dependent on them for the general stock market, which has never really happened. And on top of that, because of our economy, we're actually really dependent on them for GDP as a whole. So, I mean, this cohort of stocks are becoming more and more important. I would not say too big to fail. No, I mean, it's probably a thing, but just saying, they're more important than they've ever been. That said, to me, the 30-year does matter, but not nearly as much as it used to, because of what they're doing.
Okay, so let's get into the S&P and kind of see what the price action is going from there. I think to your point as well, if the 30-year keeps inching up, you start to have an issue with these hyperscalers that are, because if the Google's buy our debt at 7% and the 30 years at 6%, that's where because Google has a 100-year bond paying you 7%, 30-year at 6%. I feel that's where it becomes, and that's where
$100 billion at a clip, right?
Yeah, and it's concerning. But to your point, I also agree with you. We're in a different threshold for how we think about credit cycles because we have all this capex. So there's a lot of nuance to figuring out if these bond yields actually will have a meaningful impact. It seems like today they definitely are on the market.
Today to me is like, okay, it's the day that the stock market decided it wanted to react on something that's been happening for a while. So I think the other point is if you're just now noticing, you're kind of late to that party. So if it was going to be a thing, it should have been a thing a while ago. The fact that it wasn't, to me, is like, well, we'll see. So I kind of feels like one of those headlines that could go further, push the market further, but at the same time, it's probably going to be a dip buying opportunity. Maybe not today, but sooner than later. That said, this is where we are on SPY. Let's just go ahead and let me zoom out just a tad bit, and we'll go to what we should do is we should go to a clean monthly scale. So here's where we are on a monthly chart, and we don't usually go this far out, but the current
you can press the timer
here. So the current breakout is this little kind of like what we call like technically here's your bull flag, and we're still, as long as we're over this level, which is really going to be 757, we're still going higher. And I'm going to drop down slowly, and this is what we would call like multiple time frame analysis. You start really high, and then you kind of start drilling down into the smaller time frames. That same kind of level looks like this, right? And so we are slightly over. We started to actually kind of like bounce up out, and now we're going to actually retest. So now it looks like we're coming in for that retest. We drop in again, the daily, it was looking good. We gapped down, but look, we haven't even come quite down to that retest just yet. And I'm going to turn on our NFP levels and throw on some SMAs and things like that. So everything looks good from a trend perspective, just a little extended on a 1, 2, 3 day press. And then a handful of days, a couple weeks or so, actually looks like consolidation. Now pulling back slightly to where? So we're going to I use our NFP levels. And by the way, we did this training on NFP and we talk about it all the time. I did it at the Wolf Summit I was at. Today we'll let you guys register. It's free. We'll do an encore version of this training just to show you how it works. So I think Amit said he'll put the link in the description. But it's a system, so a systematic approach. So we have 1, 2 days opening and closing above here, our NFP level, which is 773.91. The low is 769. This is the breach level. Today is day 1 that we're actually a full open and close below. So from here, we're going to know very quickly if we can reclaim this 770 level. It's basically just going to be a bad dream, not a big deal. It's a little too early to say that that's going to happen, but it's mostly going to be about those headlines. And so the question is, where do we go if we do pull back? And where's a good spot to buy a pullback? So this is the range right here that we'd be looking at. And that puts a pullback actually closer to 751, which in reality is just a retest of this entire kind of consolidated range.
Right.
It can be anywhere down here, but this is that same like flag kind of technical pattern. That we were talking about just a little bit ago, but now I'm zoomed in on a smaller time frame. So on the daily time frame, it looks like this. We could pull back and we have 2 spots. I would actually say that this little blip on the radar here, probably not going to be a big thing. We usually want to use this thing on the right-hand side of my screen, which is called the volume profile right here. So there's 2 little, I would call it mountain peaks. So volume here at price, and then major support way down here, volume at price. In between, we actually have a very crystal clear, like, I don't know what happened here, but there's a massive squeeze. I'm literally just looking at this. Holy crap. When was this? What was this? This was this day right here, Tuesday, August 4th. What happened that day? Tuesday, August 4th, we squeezed a ton of shorts. That's a short covering squeeze moment. I am just now seeing this. So to me,
that was AMD earnings.
To me, we're actually now, if we're below 767 and still below 69, 770, like this is the available volume gap. So we call this in technical terms, and I don't want to get too in the weeds here, this is called a fair value gap. It's not the normal gap that people think of. It's a intraday, entire session was open, but white here represents sellers in my on my profile. and green represents buyers. What I'm looking at is essentially nothing but buyers in low volume, 0 sellers for an entire session, an entire day, whatever day that was, all day. Just we kept going up. When markets do that, they don't have they don't have enough time to decipher what technicians would consider fair value. I say fair value, think of it like literally value in that range. So what happens is price tends to actually backtrack a little bit and fill in these little low volume pockets, if you will. That's the other technical term for it. It happens all the time, but it's just like a low volume pocket. This can happen quickly, like one-time move quickly. That's what I'm looking at. And that would be a retest right in this area. Even if it overshoots, this is still a good range to actually buy. Like I would actually get very aggressive here. Personally, I would love a dip buy into this area. I don't know that we're going to get it, but usually we'll have one or two things happen from here. And that's something like this. This would be a perfect, what we would call breakout of your consolidation. Yes, it's a pullback and then retest and react. That's exactly what you want to see from a technical perspective. An active breakout right now is over 774, which we did not hold as of yesterday. So because of that, yesterday we triggered like a hold on, don't press longs, just wait and see what happens the following day. Turns out we just gapped down all the way below this near term support, which is not that strong, but and now we have a pullback into the 750-ish range.
And so if we lose 750, is that more concerning, or it's more like it's a normal test of the breakout from the consolidation for the past?
Technically, yeah, it could be a fake out. If we lose 750, I don't think 750, it's a round number. So there's a thing around that potentially being a psychological level. Just to be clear, the entire range is here. And the midpoint of that range is about 750, give or take. And the low end of support, the deeper support, is about 740. So what that means is, like, let me see if I can make this bigger, is that this area here, which is between 745 to 738, this actually becomes your primary support right in here. So losing 750, technically, no, it's not that big of a deal. It would essentially trigger like another move lower down to that lower end of support. But this entire area right here, that's your box of the next support level. So 750 down to 740-ish. That's where your real support is. I'll just make this a little bit cleaner for you, but it's literally right here. So this is support. I'll just make it green. And then this is resistance. We'll make this like a brighter red for you, but looks a little bit like that. So resistance up here, 770, support down in this box. And again, if price does want to pull back, I mean, any pullback into this range, that's a pullback into support. And typically, as long as we are holding general trend, should be buyable. You get a little bit of a bounce, but from there, you kind of want to see, okay, it'll probably take a little bit to actually do something. So I'd look at essentially something like that, and then we'd probably bounce back out. This is very theoretical, but we come back into this upper end of what will still be, we'll have to decide, is this going to be resistance in this area? And so when actual price gets in here, does it again pull back like this, only to get bought up slightly, but then consolidate one more time and just kind of go like sideways like that. That's honestly normal price action. That's very typical. So like freaking out right now, back to my sentiment of like, it's not a big thing. We can pull back to where we were a couple weeks ago. And it's from a index perspective, we're still within reason to keep the current uptrend. So we wouldn't have broken any major trends, not until we're below. Yeah, it's all going to be the same. It won't be, we'd have to fall well below 7. We'd have to fall a long ways to say that this trend is broken. So for those reasons, it sets up as a funky, like not the best spot to take a new money long. Definitely not a massive short. You could probably short term, like a few days, but I think a lot of this might be front running tomorrow's FOMC minutes also. So I would just kind of be a little bit patient, maybe take some very cheap overnight hedges if you're concerned about it, that hopefully go to zero. Actually, I did that on Amazon today, but other than that, I think I'm more focused on a potential dip buy. I'm just gonna hit Qs real quick. But yeah, we've been doing the same kind of consolidation. Here's that prior consolidation on QQQ. Actually, this is not bad at all. I mean, the more that you look at this, you're like, okay, so here's that consolidation that we hit on the Qs. Initial breakdown over here, like breakdown eventually actually reclaims the whole thing, and we're just kind of like oscillating right back into the middle section. Honestly, this is exactly why I think it was a couple weeks ago, last time we were here, it was 731 is that actual level. This is resistance. We hit resistance and resistance held. Resistance from over here. Sorry, all of this area. So that's still overhead resistance. We're not out of this actual consolidation until we're well over 740 on Qs. But if we are, you know, all that said is like, this is a very bullish setup across the board for both indices, Qs and SPY. It's just, we need a little bit more time to wait. And, you know, August is usually a little choppy anyways. Should we buy the dip or wait it out? I think if it gets uglier, I think you buy the dip is what I'm saying. So like on SPY, we just talked about, that's considerably further away, between 740 and 750. If you're in this area on SPY and you see your stocks kind of bouncing, I think you can buy that dip. Is it going to like turn into new all-time highs? Hopefully, if the trend holds, it actually should. So for those reasons, yeah, like from a trend perspective, if this is higher high, I mean, it's pretty simple. Higher high, higher low here, right? Higher high here. Anything in this area would constitute a higher low, which from a trend perspective, if this all holds true, that should then create a higher high, which is into that $800 SPY kind of level. That would be that's trend. That's normal. So I'm not too worried about it.
Okay, can we start off with Meta today? I think that's a big question for a lot of people now.
How you feeling about Meta? When is this?
I mean, dude, it's a 7-week trial. I feel like there's going to be bad news before good news.
You know, the trials are always like pretty solid opportunities for Meta to buy. I'm just gonna take all these lines and stuff. We're just gonna go raw price action for a minute. So, you know, we say this all the time, like umbrellas are bearish, bulls are bullish. Just as an aside, this is an umbrella, right? Typically looks like this. You could see another one here, umbrella. Usually bearish, and then bulls. If you want to be super simple, right? Bulls are bullish. So for those reasons, I would stay out of the way from Meta and let this kind of do its own thing. I don't know if you remember, I believe this is 2021. I actually think that this was another trial incident also, or started to. One of these two was like a trial thing. But that said, you know, we haven't actually had a legitimate pullback on Meta from a long-term perspective in a while. Like we had this pullback that was essentially just a retest of like the prior support area here.
And it lasted a day.
Yeah, like very, very short term. And this entire range over here, like this entire range is really just retesting the top of that prior breakout. So that's about $500, 550 to 500. We're retesting that same support area. I think the one thing I'd say is like, look, if you did, let's say if you bought this dip here and you held it and you got all the way up to 800, you're essentially coming back nearly to break even over here. We're going to find out if these people that bought this dip are tired of holding this or they're going to add again. So we're right at support. Long story short, Meta's at support, but it doesn't have a tradable move yet. We're going to find out which one it is. So it's either downside, which the next area of support is way in here. Now, mind you, this is 400 to 300. That's from this area over there and like this area over here. So if this does break down, you would expect a little bit of a breach here, and that probably takes you into this area. So 400, as close to 400 as you can, technically should work out. I'm just going to show you one thing really quick. 532.20 is what I have as an extension. So I have an alignment. So this is two things. So one, and we're going a little bit long because it's a little bit more important chart right now. If this, from this extension here, this consolidation breakout, we are, this is about 50% extension right here. So this is 50% of that. That's actually a bullish hold. That's at 532. Over 595, we're out of the weeds and we're going to reclaim some of those prior levels. For right now, this is still where the bears live. This is actually our chart that you and I have done on Technical Tuesdays. 690s has been resistance, remains resistance up in here. We're at the lower ends of this support area here. If 530 were to fail, I don't know why I push that button all the time. If 530 were to fail, then we are looking into this general area. And honestly, anything in here is technically feasible. I'll tell you how I get there. So it's from this absolute swing, well, from this swing low to this swing high, essentially taking this entire move as one like clean shot, one what we call like impulse high, a 50% retracement of that, which is totally normal, by the way, takes you to about 440. That's a decent pullback.
That would be the Meta 88 in 2022 range, right? Or at least
yeah. And this could go, it could go as deep as as like 350s and be a big buy. So for these reasons, I'm kind of like, Meta, please come down so daddy can buy the crap out of it, right? Like I really want to buy this. To me, if this happens, this will very likely be the dip buy of the year. Like to me, it would put the Microsoft 370 dip buy. They would go neck and neck, if not beat it. So if that happens, I would love to buy me some more Meta. Just me. Again, we talked about this a while ago. What would have to happen theoretically? Like Zuck would have to be like, everybody hates Zuck. He's out of his mind. He's losing it, right? They're having to pay billions of dollars. And it's going to be hard. It'll be a hard buy like at those lows. But right here, right now, technically from a long-term perspective, my point is that it's not massively discounted, quite frankly. I hope that it comes down so I can buy. I can buy a bunch. But yeah, this is one where I would be very interested in buying if they take it down for a temporary condition. That makes all the sense of the world to be able to buy this dip. In the meantime, you know, just kind of let it do its thing. If it's over 580, whatever, it's got a long ways to go to be out of a existing downtrend. So I'm not too anxious to buy here. Again, I'd much rather buy it deeper, lower.
Dude, if they're gonna give us a dip, I agree. They might as well just
rip the Band-Aid off.
Rip it off. It's gonna be painful for a lot of people. Let's have it happen because we know long term.
Oh, but this is the juiciest dip out there right now. If it happens, I'm all about this. So, you know, that said, is it a reason to sell? No, because what if they get a new judge in the middle of I think what happened last time is they were in a situation like this. They were not doing well. And somewhere along the trial, they ended up getting a new judge. The trial had not even ended. And then the stock reversed. So I vividly remember that. But yeah, I mean, this is why literally this moment is like why I'm never fully allocated. I'm never fully invested because, oh yeah, this is a dip that your boy is very excited to be able to get if I can get it. Does it mean I'm you know, I don't know it's just one that if this were to happen because of a trial or whatever, honestly, yeah, this is I'm all about this.
Yeah, and look, I mean, I've been thinking Meta has been cheap since that 650 range, which objectively it has
Yeah.
been. But the cheap get cheaper when you have, I mean, Google went from 180 to 120 on the antitrust stuff. The difference here is that this is not antitrust. This is like, you know, the nature of their business with addictive models that are harnessing all this attention. So it's a different type of issue, but it's functionally the same thing in regards to it's an overhang on the stock. It will be, you have to be really patient with Google, but then you got the breakout. And it will never look back. And I think that will happen with Meta, but it might.
Bingo. And this is a long-term chart, just so everybody's crystal clear. I am not, and also I am definitively not saying to sell your Meta because you're going to get to buy it back cheaper later. I don't know that you're going to be able to get to buy it back cheaper. I'm just saying that if it happens, this is the difference. As an investment, no, I'm not selling this, right? But as an investment, because I'm also a technician, I can look at this and say, you know what? The deeper this gets, the better my like long-term ROI will be. And so if it does get deeper, my dollar cost averaging, my buys, I want them to be bigger. They can be lighter now, but the deeper this goes, the bigger my averaging I want to be. So I want to have cash available.
Also, no one knows.
No, you don't
can't
know.
sell your Meta at 5. You have no freaking idea if it's actually going to get that irrational and go.
I mean, if you did that last time, you literally sold the low. Right.
Yeah.
So for those reasons, like, no, it's just like, I want to be available. It's not a long today, right? Not an auto long. We don't have that. Right. If it's over 577, I can tell you it's very likely going to whatever that is, 680 range again, but we're not, right? We literally just lost that yesterday when this trial opened. So once we triggered this, okay, well, we trigger essentially a trade down to 532. And like I'm saying right now, if we're below 530, yeah, like we're gonna get a juicier dip. And so I'm gonna let it fall. I'm not gonna step in front of it. And I'm gonna wait and watch for probably, just so people see, like a little. So this is a weekly chart. I'm gonna wait and watch for something just like this. So what this looks like is like that one big flush candle, like one big move, and then a bit of a sideways move. And this is 1, 2, 3, 4, 5, 6, 7 weeks. This is literally 2 months of sideways action that people don't really realize. I'm going to look for something like this. Again, I'm not trying to snipe this low. I'm trying to look for, do I get some kind of consolidation that actually triggers me to the upside, and buying at whatever this is, 120 versus sniping the low at 80. Yeah, that's great. But even if you got it at 120 and you rode this bad boy to 8, I mean, that's a hell of a trade. That's a hell of a trade. It's a hell of an investment too. You know, so same thing. It's, if you were doing this in the past, thinking that, oh, this is going to hold, support is like a general area. You would have thought that this had pierced all the way through support and you were in no man's land, which, you know, for a time it was. That's literally when they threw it away. This is 2022. And man, not having to buy the knife, but waiting for it to start recovering enough to say, all right, this is ready to roll. Yeah, we will be able to do that. We will see that. We will highlight it very clearly for you guys.
And what helps is the company's actually growing, you know?
Yeah.
Like,
yeah, I love it. So I'm very interested in this dip buy. I'm not interested in front running this dip right now, unless it's higher, which might seem weird to an investor, but it is what it is.
Nebius.
Nebius is very interesting. So, side note, that means you have to continue to tune in to Technical Tuesdays if you want to get the dip buy on Meta. But, Nebius, actually, decent little pullback. Here's the thing. So Nebius is at, this is your prior highs over here. So 1, 2, this is that kind of like, we'll call it head and shoulders that did actually play out. This is one where you have a neckline here and you actually doubled this extension all the way. So this head and shoulders pattern is what we say full. And then oddly enough, there's another inverse. And I'm not a pattern guy, but this is like an inverse head and shoulders that plays out here and also completes as well. So now what you can do is you can kind of just say, all right, well, where is this all kind of coming to, like, where's the main battleground? So this is the main battleground where it broke down in the past year. Resistance, resistance, resistance. Before that, kind of support for just a moment, right? And the inflection point, which is This is really the big inflection points. So now we want to see, all right, as this comes in and retests, we have a little bit more downside to go. This is about 229, by the way. This is your support. This should be your support. So again, this is just price action. This is what I meant by price action on technical or basis points. If you guys didn't see this episode, this is what I meant. And then we can turn on our indicators from here and get a little extra confluence. I'm going to look at a volume profile on the right-hand side, and I have exactly this confluence right here. So this is exactly where support is. It's about 225, just hovering right on those peaks. So yeah, it's a little bit of a pullback. Trigger on this short was below 265. I actually had highlighted that on my last, I forgot to hit play, but I'll close this out here and just like highlighted that yesterday on our stream, down to this potentially 225, 235 area. So I'd be interested here on a pullback slightly lower. This might even be as early as tomorrow to see, okay, does that happen? And then do we actually get a bounce to the upside? Which if we did, get this, like I'm just going to do some arrows and pathing here, path this out. I would venture to say that a little something like this might actually look normal for people. That's what a normal chart actually looks like. And that's to say, if essentially this whole area is a new consolidation. I think we did this on Micron the other day, last week too. That puts my support right in that same exact area. Now I'm pulling out my fib tools, measuring. That puts it at still on track for a $400 profit target, assuming that this support area in here holds. So there we are. I think it's definitely one to watch. If it pulls back below 240, you got another $20 to come down. And then I want to see buyers start to step in, and I want to see something like this. So I don't hate Nebius. I think it was a little overstretched valuation wise. I don't know. I'll leave that to you. But technically, this can come down slightly more. But then if it gets bought up in the next week, I would really like this. That would make a lot of sense.
Micron.
Move right into resistance. Actually, exactly the same. So pathing is appropriate here on Micron. Let me hit the timer. I'm not sure whose stream this was, mine or yours. This is the bear zone right here for Micron. We kind of assume that if you were to get over 1050, we assume that 1050 is going to happen, which it got very close to 1035, close enough. And then we gap down. 979 is now it's still resistance. So it could take another shot or two at this area, but this is essentially a resistance. And if it can hold in this area for a while and eventually pull up and out, that's what you would want to see. So this is like all the process of basing or bottoming out. Again, on my volume profile here, looking at volume by price, we see a lot of volume stacking up literally right in this area down to 900. So again, from a trend perspective and just price action, going back to raw price action here, technically this high here is actually a higher high, and I'm seeing higher lows. So the last low was, call it right over here. That means that anything in this area here can be a higher low, and then if I see a new high from here, that's gonna be good. And then I would expect to see this eventually trying to retake this high over here as we get there, but that'll be resistant.
So you don't think low 700s is like, that's July lows? You don't think that's easy to get back to?
No, I don't think it's easy to get back to. Like, well, I think you get halfway back, right? So halfway back, again, you can do this measurement thing like anytime. That's just taking, let's assume that this is the entire impulse to the upside after this kind of consolidation break. Halfway, 50% measurement is 871, and then down to this is called a golden zone, and we call this the golden pocket right in here. So sub 850, I would start watching, and you could really kind of look left also. So if this is the last low here, the low before the last low is right over here. So this area becomes an area of importance in the future over here. So that's what we'd want to see. So again, same thing. Is today the dip buy? Maybe, maybe not, but the lower these things go, the more compelling they are. As long as that July low holds, I think everything has a tradable low. So as long as we're holding, meaning like from a risk reward perspective, I'll just show you this. If I were to take a new long position, let's say I bought something like this, risk here to take a trade like this, that's a 4-to-1 risk reward, assuming I can get a buy somewhere in this area with the stop around 7. I mean, you could even do it this way, right? If I were to take this from a long-term perspective, that's 3.8 to 1. I'm all about that. So if you traded this is the math behind trading, risking one to make 3. Yeah, you want to buy this closer to 800, as close to 800 as you can, with a stop near those $700 lows. And yeah, like you could take this trade all the time, anytime, and make a lot of money. But I like this. This would be, again, it's like another kind of like breakout and retest of this prior consolidation from here. So what happens over here? That's just a simple watch right into this area. So pulling back half of what we just did, totally in the cards.
Broadcom.
We got ADH crew in the house. Shout out to the neurodivergent crew. I like Broadcom. I actually think so. Broadcom, I was sorting through some of the stuff. They still have to report. This was actually resistance area. This big push down is a VMware hack. Interesting to me that I just think it's funny. Like VMware is not, I don't believe VMware is that important anymore. It really was back in the day. Shout out Michael Dell, who probably sold the top of VMware to Hawk 10. I think if we should listen to any trader, it's probably Michael. But he's the GOAT. You know, Michael Dell started Dell in his garage, just like Tim Apple. Not Tim Apple, but like Steve Jobs. Did you know that?
I did not know Michael Dell started Dell.
You didn't?
No,
it actually is founder-led company.
No, I'm joking. I knew.
He did. In his garage, though. In tech.
He also he still owns a decent chunk of Dell. Like he hasn't given.
Yeah, the Dell that he sold was via VMware to Broadcom.
Yeah.
And you know, Hawk 10, to his credit, I've never been a massive Broadcom fan, but to Hawk 10's credit, his growth by acquisition kind of thing it just makes Broadcom a massive company. But for Broadcom specifically, to me, to get taken down by a VMware headline didn't make a lot of sense.
Crazy. Yeah.
Yeah, like it makes sense. VMware is very important. No, don't get me wrong. But it's more for on-premise virtualization, internal. I wouldn't say on-premise, but it's more for like you own your entire data center, so therefore you run VMware on your campus, on your production, whatever. It's virtualization. I don't want to get too technical. So it is important. It's not like COBOL. It's real tech. But it's back into support right over here. So this is your 200-day simple. I honestly, this one with the catalyst ahead of us, and I'm going to zoom out a little bit. This is earnings on early September. To me, I'm watching. I actually have a position already. I've been slowly nibbling on this as of yesterday. It didn't buy it today. Today, I'm like one more. If I get one more downside, or if I have an upside move tomorrow, I will probably buy some more of this. But I do actually really like this spot on Broadcom. Just a small little volume profile here, 380. It's a super interesting spot. If I were to take this over here and say similarly, you know, this prior high, I kind of think that this, I'll do it again. I'll just go fully, you know, price action. If this entire area here was the big breakout, look, I mean, this is breakout, extension. Sure, we have a pullback. We have a sideways like consolidation. And from that consolidation, we break out one more time. And now we've just, in a couple days sideways, hold. This is pretty textbook pullback. If in this moment we get a retest, I mean, this is literally it. This is where you watch. So this looks like one of the better technical buys around this 380 area. Assuming that we get another sideways consolidation, which is why I don't need to be in a big rush. I would expect something like that. And then hopefully we get this. So from here, you watch for a little consolidation and you watch for a small break of structure, which we call over that it's probably like 385, 390, whatever the inflection area was. Actually right here is, yeah, just under 390. If we lose this support area, then I will say it should actually then pull into 308. But for now, I would assume that this is going to be support right into this general area right here. So for now, until proven otherwise, I'm actually going to assume that this 380 is still support, and therefore it's a place to watch for a dip buy and recovery from here. Again, very, very high risk reward. Let's just show you something like that. It would look like this. Very high risk reward, even just to I don't know, 450 easily, if not higher, right? So this area, yeah, I like it. I like it. I think it's just sentiment driven. Maybe after FOMC minutes come out tomorrow, we'll have a little bit better perspective. The market won't be so knee jerky.
Right.
But yeah, today was not nearly the flush out day. We gapped down, but after we gapped down, there was no more selling intraday. I think actually we started to see buyers coming in intraday towards the end. Yeah. It's just okay. I like it for a big, heavy watch, because this is one where this setup actually could be a violent squeeze to the upside very quickly ahead of earnings. So for those reasons, I like it.
So you have some headlines here. The goal appears for the Trump administration to be increasing pressure over time until Iran is more willing to accept Trump's terms. The administration is moving away from trying to hammer Iran ASAP and towards a longer-term effort to strangle Tehran through sustained economic and military pressure. I think that means oil is not coming down anytime soon, which, adds another layer of volatility to all this.
Imagine if we didn't have the Iran war right now, where the market would be.
I mean,
good.
That's a great question. What would have happened this year if we didn't have this war?
It would have been a little wild. It probably would have. I mean, it was already one for the record books as it is, but yeah, I would just be very careful. I like Broadcom for a tactical trade to the upside. I will caveat that with it's not the best from a long-term technical spot. It could come down lower, significantly lower, to get a better technical discount long-term. This is more of a short-term, very short-term type of tactical read on Broadcom.
NVIDIA
actually same. So it would be a short-term tactical read. We moved higher. This one's going to have earnings first. Yeah, I got to be honest. A lot of these look like we might come down a little bit first. This looks like 213. And that tomorrow or later on in the week, depending on how fast this goes, we might get better buys later on, right? So this looks about 213. Finish the pullback into this retest. So retesting this little red box I just drew this was resistance with a break out from that resistance. And now we're just going to pull back and retest. So when we get these retests, typically I'm looking for general reaction that looks like consolidation. So not a V shape, but a couple days where we stop going down. That looks like this. It's 1, 2, 3 days. And then you get a trigger upside ultimately. So it looked like this, and ideally a push up back to 220 area, which is where it is today, and possibly a little consolidation. I don't know. Right before earnings. When does this one report? This one has a week.
Next Wednesday. Yeah.
Yeah, so about a week from today. Yeah, I think that based on that timing, trying to time this is hard enough, but 213 ish by the end of the week, and then next week probably back to 220, which is not a lot right now. That's more like day trading, $6 downside, and then back to the upside around 220, give or take. You don't want to see this sub 210, 208. You don't want to see this below the 50-day.
Right.
I'm talking, this white line is the 20-day simple moving average. It's basically getting a test somewhere around that, and then watching that hold. If we get a test and it bounces, but it doesn't hold, that would be bad. And that's how you would get this. But that would take longer to play out, and that would be post earnings. We won't know. All right. That's Nvidia.
CoreWeave.
These are important tickers, huh? I kind of feel like we could stay on the fives, but how are you feeling?
Yeah, that's fine. We can do another 4 or 5 tickers with 5, then we'll move on.
Yeah. So CoreWeave, again, measuring from, just setting the stage, if you will, extreme high to extreme low. For these extreme lows, retesting support. This is support. Once here, once again here, back in that resistance area. I wanted to see this up into the 140s. Didn't quite get there. I have not sold any CoreWeave right here, right now. Actually, are we buying this again? I kind of think you might be able to. So now we're yeah. I didn't hit play.
It gave up the entire pump on
I don't
earnings.
care about that. like this. All right. So it didn't hold the breakout. So it's a fake. Another one of these fake kind of initial breakouts. But now that it's pulled back and it's right into this support is down to 80s, high 80s. So right in this 87.50 type area. Yeah, this looks really close. So what I'm going to take all my drawings off really quick and the SMAs just so we can see it. Essentially this area right here was that big consolidation, right? So we know where the lows of this support, this is support, right? So this support is taking from whatever this level is, 80s here. And I can also basically assume it was derived from this area over here. So if this is derived from here, which became resistance here, support here, support, and then resistance, this whole box becomes, with a breakout, right? This whole box becomes our general support area. So we're in there, came out, breakout. We're going to retest. Maybe we go sideways. Who knows? But if that area can hold and we start to see interest come out one more time, literally this is how structure plays. And that would probably set up like a big inverted cup. I don't hate this. So that's what I'm looking at. I think that the main thing is this area. If that area becomes an area of interest here one more time, which we can align that with this whole shelf, yeah, you're really close to a higher level of support. Again, if this is the last low, great, right? A higher low technically could be anywhere in here. So yeah, I think this is buyable again, dude. I think it's buyable again, and the whole sentiment of, CoreWeave being a long-term kind of like position if you're going to be invested. Yeah. First of all, has anything changed on the story? Like, I just want to know, does the 30-year really affect CoreWeave? I don't know. I think what's more,
I mean, they have a lot of debt, but I would imagine it doesn't.
But how are they getting that?
Them.
Yeah, it's again, it's their ability to raise and ultimately pay for gear. I think their ability, who are they getting the money from? It's from the big banks. Like this is why Jensen comes out and creates this entire like private capital committee, like so they don't have to deal with the 30-year.
Right. That's fair. Intel.
Intel actually probably a little bit ahead of everybody else in terms of that pullback. So where are my lines? We had all these lines. I must be on a different chart. Anyways, we had the broadening formation on Intel right here with that kind of like center line being right in here, that consolidation area. Technically, yes, off the lows of this is where you can pick it up, but you pick it up for like a short-term bounce. You want Intel to actually hold like literally right here, right now. So this area is going to be support. This is the bottom of that prior consolidation for Intel. And when you zoom in even further, you're looking at these very small little, I call it wicks right here, this area here, which we got it one more time today. So right here, right now, Intel is on support. And so if it can bounce tomorrow, that's going to be the best. It's going to be one of your better risk rewards. That said, it's not out of the weeds. I would not call this out of the weeds until you're over, let's say 120. This is resistance upside here. If this actually happens to get over 120, then we're actually going to like 160 plus. But until then, what I'm saying is that it could battle this whole area and continue on this lower trajectory. And I just don't want this to turn into a downside channel. So that's the concern with Intel. It looks interesting. First shot at that 110 overhead resistance. Resistance is an entire block. It's an entire area around here. But it starts over 110 is going to be your first, like, oh, this is looking good. At 110, you're probably very likely going to get to 120, but you still need to be a little bit more cautious because you don't want to have, that's where the major bear zone is on Intel. So from here, it had the smallest bounce, and I actually saw some buyers coming in towards the close on Intel, the very last minute. So it's actually pretty interesting for a watch tomorrow for an upside move if it can recover this general area. It didn't make it quite to the full bear zone, and we are just above support right in here. So this support 90, low 90s to high 80s. If we open up down there tomorrow, I'd probably be assuming we get some kind of bounce like that on the Intel. I like it though. All right, I'm going to move down to 250s from here.
Bloom Energy.
245, Bloom. Similar. Just getting my bearings on the chart. It's the same kind of broadening formation right into that same like center line. So it's the same setup as Intel. And it's also at near-term support right now. So that box that I just drew, call it right here. This is your resistance area, 240s, 240. It aligns with your 50-day. Now you're at support, very near-term support. So really, like, it's like, okay, what's going to happen? Do we consolidate like this and ultimately break out, or do we get rejected one more time after trying to like chug towards those highs? That's where we are. I think you just watch. Technically speaking, it's a somewhat, dude, why can I not push play? Guys, I've not pushed play. 200. Bloom's at 200.
Yeah, it's up from 160.
It was 160.
It was.
So I'm just going to take it.
It was at 250 yesterday. So,
oh man,
peak to trough. It's obviously
a massive range. So, again, just measuring if this is the whole move to the upside, literally 50% is right here, right now, right here at 205. That kind of basic retracement takes you to 205. If it gets any deeper, the 190s is going to align actually with your 200-day simple, which is this red line right there. I would, yeah. So everything across the board is at the first level of support. Is it the like primary level of support? No. So it's like it's now testing the ranges of support. So it can go in, it can go down a little bit lower, but I mean, from there, you want to start to see buyers step in and actually pick these up.
Yeah, I like this around 185, 190. I mean, if it's gonna flush, let it flush.
Exactly there. Yeah.
Because the valuation is still annoying on this thing, but momentum is so great. So momentum to the downside is where I think a lot of these dip buys should be waiting for. Like the only dip buys today, I agree with you. Large cap semis, like how much lower can they really go after a 5% drawdown? Bloom, it's like 25% before you think there's a bottom.
Yeah, right. But I think it's close, dude. Like if you're gonna see, if buyers are gonna step in one more time, like come the end of the day tomorrow or Thursday, I posted something on Twitter or X, whatever you want to call it. Like, it's just like the, one day semis are up and software's down, and then the next day software's up, but semis are down. And then the next day semis are up and software is down. Today just happens to be a semi down day with software up day. Yesterday was the opposite. So maybe tomorrow is the opposite of today. And like ultimately all the like the tide across the entire ocean slowly lifts. But the choppiness in the process is a little hard to handle sometimes. AMD. Literally exacting, right? So right on support. This one, we will see. It is the first level of support. If we're gonna have a semi day tomorrow, my goodness, dude. I'm gonna go out of my way though and say like a chart like this doesn't. Here's the one caveat why I'm like not about buying the dip 2 day and maybe waiting for it to get a little bit worse is that you remember when we think about things like if it's trying to go higher, it's got to go lower to get more buyers essentially. And a stock can only resistance and support. They're like doors that you're pounding on, right? Like the cops are coming and they're pulling out, they're trying to run their battering ram through the door. Eventually the door is going to fall and stocks are either going to blow through resistance or support, one of the two. And you can only sustain so many like blows before the door actually gets broken down. In this instance,
that's what AMD looks like to you?
Yeah, but support has been tested way more than resistance. And we know that resistance is heavy up here. Support has been tested a ton of times. 1, 2, I countless number of times. It looks heavy, and it looks like the door of support is about to break through. And I have a little umbrella, right? It looks heavy. That said, it is on support. So can it hold one more time? It really could, and take another shot at resistance, but it's stuck in this range. It's a no trade to me. If it does come down, I'll just try and grab this from, 200. That's the 200 day is sitting around 325 right now. That's going to put a buy zone somewhere around 3. By the time this actually were to get there, it's going to put a buy zone somewhere around 360s on AMD, which, quite frankly, is not unreasonable. It's about $100 lower. But again, I'm not going out of my way to buy this here now unless it's higher. And I can clearly say that resistance has been like taken out, but it is not. It's more like testing support one more time again. And this one specifically tested quite a bit. So TBD.
Rocket Lab.
Lab of Rockets.
Yeah, 360 would be a bit ugly on AMD, so I wonder if we get there. But if it is, I think a lot of people would be happy because a lot of people missed AMD, right?
It would be scary. I'll give you that. Like every time you get a dip, it's super scary, right? Like there are very few stocks where like the dip is like easily bought for an active trader. I don't know. We're at the lava rockets, but you got to look back and be like, oh, this thing has come a long ways. Is it, technically it wouldn't be horrible. Try to get some of these lines off. Consolidating. So sitting around the $80 range. Honestly, how long has this been at 80?
Like what, 3 weeks on about?
No.
Well, 70 to 83 weeks. 80 has been like a week.
Yeah,
I think.
2 weeks. 2 weeks plus. So 2-week consolidation. Where's that tool? I wanted to get that. I wanted to get this old tool. Click double, narrow. Nope. I don't have it. I never remember exactly where this tool is that I'm looking for. But what I'm trying to say is my sentiment on Rocket Lab was that all of this could look like this massive consolidation in the future. And that's exactly what I'm seeing. So I'm not seeing, this looks like premium selling. Premium selling is the way to go. Bars pattern here. There. So if I were to take this, it's called a fractal. Like we had a similar kind of come down from the upside. You get a little bit of this sideways action. I don't know. I could easily see more sideways action and another test of this liquidity area in the future, only to get bought up, like something like this. So I think Rocket Lab's fine, but I think it's more of a hold kind of spot, which again, we've been spoiled with all these V-shaped recoveries. This is support around the $70 zone. I think $70 remains support. Can you get another liquidity grab sub 70 easily? Yes. In the meantime, I would just honestly expect chopping motion like this for a little bit until we can actually get some more movement. But this is in a consolidation. So technically it's perfectly fine. It's what stocks do most of the time. And ultimately it's healthy if it can hold the, generally speaking, $70 area. And that is, again, all of this prior top and consolidation across the board right there. So this is what I'm talking about. And ultimately, if it can get out, that would be ideal. But this is a process. And I think you have to be open for that to happen. So you don't want to be in, this is something that looks like it's going to be consolidating for a bit. Either be in very long-term like positions and accumulate, be in accumulation mode here now for the very long term. That's pretty much it.
Google.
The Googs. I'm interested in the Googs. So the last few days, these mags have had a pretty rough time. Here's the Googs. So what I'm watching on Google right here, right now, is potentially a bounce. I'm seeing some consolidation similarly. So measuring from this extreme low to this extreme high, I am sitting at my halfway point of 340, having already picked up off of my, what we call like that golden zone. So the first buy and pullback already happened at 325 from this move. Technically speaking, this is good right here. This one, any kind of blip on the radar like this over here, I think is, again, in accumulation mode. This looks closer to the end of accumulation mode, whereas Rocket Lab looks like it's closer to the beginning of accumulation mode. So as close to 340 as you can. Can it come in slightly lower? Yes. For a while, these SMAs will start to like get even tighter. So the blue, white, and red, that's the 50-day is blue. The white is the 20-day SMA, and the red is the 200. As long as price action is in the upper bound of this, I like this, right? So this would be like if I can see like the distance between those SMAs start to expand again. What I'm seeing right now is that they're coming in to like a contraction area right in here. And if price can ultimately, I'm just going to do trade above, like go sideways, right? But trade above those SMAs. Honestly, the 50 is going to curl back, the 20 is going to curl back this, and I'm going to see that extension of those SMAs one more time. So this is in the process of, to me, basing the downside here. I just don't want to see anything below 320, not any sustained move. So this is support. In that same scenario, while the SMAs are consolidating right in here, if price the downside is if price is below them, then I'm actually going to see the opposite, and I'm going to see expansion to the downside. But right here, right now, this is consolidation. Its price is above like my major technical pullback range. So I need to stay positive on Google. This looks very constructive. It looks like it's going to take a little bit. So again, similarly to Rocket Lab, but closer to the end than the beginning of accumulate for the longer run. I like it. I just don't want to expect, I don't want people to expect it to explode tomorrow.
Right. Iran.
Don't they report?
Yeah, the day after NVIDIA.
Oh, so 44 was a big deal on Iran. Big deal. Now that means you have to wait for 39s. So 44, 43. Dude, these stocks are all the same. Hold on.
Wow.
Like,
charts look very similar.
They're the exact same, right? You have the same kind of like, whoopsies kind of breakout, and then ultimately come back in here. We're literally, I just took, these are funny. Yeah, I literally just took the exact same chart. There it is. But I will say, if you get this, that's probably more accurate. You could bounce like this, and then 39 is what I was going to say is that immediate support. If 39 holds, that's good, right? But if it doesn't, then you do expect one more time to get this $30 retest. The thing about this is like, you still have to be concerned about dilution. Do you know what the share count is? Like, is it going up massively right now?
Well, they have a multi-billion-dollar ATM. It's about 350 million shares outstanding.
But what was it last quarter?
I actually don't know.
Oh, okay. So I'm just looking at the trending share count. So where that $30 comes from is from the extreme all-time low to all-time high 78. That is literally that exact range right here. So 39.95 is that kind of like middle of the road 50% move, which means that this entire area from 39 to 30 is actually your support, with your strongest level of support being just below 30, like as close to 30 as you possibly can. So 39, decent support. $30, much stronger support. Do you get it? Who knows? But you're coming into it, and we want to see price action. If you're bullish, you want to see price start to get held up and bought up and ultimately go like this. So does that happen before earnings? That's the tough call. You're running out of time. So it's got to happen soon, like very soon. Otherwise, you're left to a fundamental decision, which TBD on that.
Marvel.
Cool. I watched the movie Miss Marvel, not Miss Marvel.
Oh,
the Marvels.
I thought you were gonna say Spider-Man.
Did you watch Spider-Man?
No, I did not.
I
want to though.
Really? I'm ready for Doom. All the Doom trailers are coming out. Are you a sci-fi guy? I don't remember.
Dude, have you heard the song Bohemian Rhapsody?
Yeah?
Because I'm just discovering that. So
It's kind of sad.
There's a lot of emotions to that song.
It's a very emotional song.
No.
But Queen is like the shit, dude. Like one of the greatest, like so many hits, dude. What can you say?
I agree.
Oh, that's right. You know what? Go ahead, dude. You know you want to do it.
Do what?
You want to sing it.
Oh, dude, I've annoyed everybody enough by singing this stupid song.
Here, as I'm aligning my chart. I mean, they kind of need it on a day like today, right? Like, why not?
That's true. No, but it's like a day like this was coming, bro. We've had vertical all August. Every earnings was great. Every reaction was great. I feel like this was the most unsurprising little sell.
Yeah.
Line.
It's not.
It's just when it happens, it's like 10% in a day on a lot of these stocks. That's the issue.
Yeah, it's like you want to go call your mama.
That was good. I see what you did there.
Yeah.
I see what you did there.
So what's the next song that we sing from Queen? Is it what's the We Are the Champions? Is that where we go next?
No. I want to break free. There's a lot of them.
Don't they have? What's the guy? It's like the ice. Not the. What is it? They have a. Oh, I gotta look it up. There's a ton, but there's one where it's like under pressure. Under pressure.
Oh yeah. That's
under pressure. That's where we are. That's Queen. All right. So 210. Marvell, Miss Marvel is under pressure. Like many other stocks, I think it's close to 200. If this area holds again, that's actually going to be ideal. All of this again, all of the stocks are absolutely in consolidation. You can really see that, like if you throw your simple moving averages, I'm gonna tangent here for a second. Your 20-day simple moving average, your 50-day simple moving average, and your 200-day simple moving average. These three SMAs, not EMAs. The price is between all of them. And so when price is in between them, you kind of play what what you historically call like simple moving average ping pong, which is in effect a form of consolidation and kind of looks a little like this. It happens. Stocks don't always go vertical. And in this process, honestly, it's ultimately healthy. I don't know that this yellow line squiggle is just a squiggle is exactly what Marvell is going to look like, but 210 is the nearest form of support right here, right now. Again, everything is literally on support. So that comes from this prior breakout and this general consolidation right here. Also, from the last consolidation break of 128, that is literally a double at 210. So interesting number. I have some confluence. I don't have a lot of confidence that this is ready to break. It looks like more knee-jerk reaction. So off the lows into earnings, we get a little bit of this profit taking, or not profit taking, short covering, having had a massive, if you were short from the threes down to 169 to cover some shorts before earnings makes all the sense in the world. And now we're just dealing with people that, well, maybe bought this dip over here who are now nearly break even. That's exactly what we're seeing. A lot of the stocks in general have had massive moves off the absolute or the most recent lows here, right? And they're now back to where they essentially purchased their stocks. And the weak hands on a day like today seem to be listening to headlines and selling because they're close to break even. Is it a bad thing? No, not necessarily, but it's an active trader thing. And it's just what people tend to do. And that's what we're seeing. So this pullback now, what we want to see is we want to see, do people step in and buy it? And where would that happen? Probably under that 210, close to 200 in this general area. And you would typically see something like this. And it, again, would be another attempt to say, all right, well, over here, we're still going to be dealing with these weak hands. And are they going to be selling because they bought the top? Are they going to sell right there? It's probably still going to be resistance, which unfortunately means that there's a little more back and fill to go. Marvell, Miss Marvel goes into the probably year-long consolidation 2.0. God, that would suck, but kind of what I'm looking at. So that's Miss Marvel. We're gonna dub Marvell Miss Marvel from now on. Is that cool? I like this.
Robinhood.
The hood.
This one, I have a theory why it's been held down, but it has not participated at all in the 3-week rally that we've had on semis and software, to be honest. I think prediction markets could get banned if the Democrats win.
Really?
Or the fear is the CFTC is not going to look the same in 2 years. And right now, prediction markets are driving the bulk of Robinhood's revenue outside of options. Like if they were to lose prediction markets, they would not be growing this year. Think about that. They would literally not be growing this year. Or they would be growing, but it would be like, 10, 12%. It wouldn't be like 30%.
No, it wouldn't be.
That's
And
I mean, what else could you have a reason for why this thing is still under 100? Like, what is the street upset about?
Well, it doesn't have a catalyst really necessarily.
Yeah, but the earnings were amazing. The catalyst is the semiconductors are running and everyone's trading them on Hood.
Yeah. I think if you yeah, I mean, so to that extent, like CBOE keeps delaying the 24, the new extension of hours. We did get the pattern day trader unlock, which I think is overall going to be somewhat bullish. I think there's still some things that they could do. For example, what if Robinhood integrated with TradingView? I mean,
no, but
Vlad,
like all those things.
But somebody call Vlad the team.
Jason, all of those are abstract ideas. Like, why is the stock being held down right now after the results they put up? That's my question.
I mean, it's growing into its valuation.
Is it? I mean, okay. So then you think it's overvalued, or you think it's like not cheap, or it's
I don't think it's not cheap. Is it cheap? I don't think it's cheap.
Let's look at this. It's growing at 30%, trading at 40 times earnings. I mean, I don't know if it's necessarily cheap. I don't think it's like egregiously expensive at 150.
Yeah.
And also, this is a stock that has easily traded above 100, right? So I'm also like, the valuation thing is like, come on, like some of these semiconductor names have stupid valuations. Why is like Hood being punished,
Yeah. So all I can tell you is Hoodie is actually gearing up for a big move in the next 3 to 6 months. And maybe people are frustrated. I don't know. I'm not.
I think there's something deeper for why it's being held down, bro. Doesn't make sense for it to be held down like this.
I cannot tell you what direction the move is going to happen in, but remember that those SMAs, those 3 SMAs where I was talking about, and I was specifically like, when they get really tight together, like that's when we're going to get like big moves, and the distance between them is going to. This is as tight as it gets. Yeah. Like literally right here, right now. So one day does not make a trade. We're on support yet again, $90. So prior high here, resistance, which turned into support here today, 91.15. If this $90 level does not hold, expect Robinhood to come back into the mid to low 70s near instantly. I mean, near instantly. So when I talk about these SMAs, what I'm talking about really, I say big move, I really mean quick move, like a violent move. Like if you look at Meta, this kind of flush has been very, very quick. I'm talking about a very fast move, which would come in and retest this area one more time. That said, imagine if like just one little headline comes out, and why you want to be cautious here. One little headline comes out and this is trading over 100. Where's price? What's price going to do? It's going to blast through this. So we are literally in the watch zone. Personally, I am inclined to buy this dip. We're at support right now. Again, just measuring from this low, which is not the extreme low, to this extreme high. This is that 50% range right here. And this whole level down to 70s is support. I'm about to run out of time on Robinhood, but ultimately I think this is net consolidation. The one caveat I do is I'll pull this back and do the all-time low, which gives me, there it is, roughly $80. I'm happy with roughly $80 also. So this is, look at that big old volume shelf. So this is your support, your major support. It actually goes down to 58s, which I don't think is going to happen. But if this does extend to the downside, 58s would be in the cards from a downside move perspective. It's a little too early to call that. And upside is new all-time highs. So I think you watch this. If it's below 80, then we're probably in a little bit more trouble. And we prepare for lower dips. But until then, I'm not, I wouldn't say sell this at all. I do like it. I would just, I like Hood, dude. I honestly think, we're over time. on the hoodie, but I think it's about the brokerages and the AI stuff, and how is that, like, if they could get really into this agentic trading, or like, oh my goodness, what if, I don't know what the events are for Hood coming up, but they need a catalyst. I wonder if I could reach out to Vlad and say, like, if we put on a vibe coding for traders event in the Bay Area, sponsored by Robinhood and Anthropic, I don't know, some kind of like collab, like we could set that up. But I think that's what they really need. If they're able to do some kind of like be the spearhead in the space, because I know a lot of people are interested in that, but
Right.
that would be cool. Sorry, just a thought, random thought. John lols, you know, I don't know. I mean, wishful thinking. I like Hood long term, man. You know me. I love what they're about. I love what they're doing. Whether or not the stock goes up today or tomorrow, I don't really care. But yeah, I would be ready to buy lower, but I don't think it's. I don't see why, unless it's aggressively overvalued. I don't see why it would really take that kind of a tumble. But again, I would have to default to you on that.
SpaceX.
We got another tranche coming out soon. Ooh, of dilution. Did not get over that initial price. Look, 149.80 on the button. Yeah, there's resistance for you. There she is. So until then, let's just take this SpaceX. You know, dude, we have the last time SpaceX had something coming out. Look, this is at resistance. You don't want to go long at resistance. You know, this is not pre-July. We were in an active breakout market, right? And so I think a lot of new traders like to trade breakouts because they're kind of obvious. And then what happens is the market doesn't go into a breakout mode. It goes into consolidation mode, which, if you haven't heard the message of today, we are in consolidation mode. And then they keep trying to take these breakout trades, and stocks don't go anywhere. It's not even that they're going down. It's just that they don't go anywhere. And you lose all your money trying to trade short term. We're in that scenario in a lot of spots, right? So just be more into buying pullbacks at extreme supports and selling at resistance right now, or taking profits. Maybe not selling, but if you're actively trading, taking profits at resistance, because this is at resistance. This actually looks like a short, dude. It looks like a short to 125 into that 20-day simple, which is going to be about a 50% drawdown from this more recent low to high, and this quick move pulling back in here, going into a consolidation like this, likely something there, and then ultimately, sure, bouncing one more time out of it if it can. But this would set up a larger bull, your 120s, 125. That's what I'm looking at. So I'm looking at a pullback to the sub 130 down to low 120 area on the SpaceX, probably driven by the next tranche of dilution, potentially, or fear of, and then it gets bought again and goes sideways.
SMCI.
This is not looking ideal. 200 week simple. I think it's going to try and give back that earnings move. Unless tomorrow immediately tomorrow we're back over, call it 40. Very likely. Just this earnings press, call it at least to 35. If it's not over 40 tomorrow morning, expect this at 35. And then expect a little bounce, probably back into the 200 week, which is, you can't see this, but there's a little purple line like that. There's this, I'm tracing a line. That is a 200 week simple moving average. That said, remember the main ones that I watched, the 20, 50, and 200, they're all here, even with this pullback. So on SMCI, even with this pullback, as long as price is over 30, this chart is going to start looking really good for a long-term reversal. So I will say that as long as price remains over $30, even if it pulls back a significant chunk of the earnings move, I don't think that matters in the long term. It could be another 6 months of chop, but aside from that, I think that this is going to look good overall. Here's that $30 level, massive support across the board. I mean, massive support consolidation. If this does come in and retest that area and ultimately go sideways for a little bit and get bought up one more time, again, this is not really active trader, but more like longer term. Look, this is how a bigger move can happen, but you need to be very, be like my Rivian, like, you know, it takes what it takes. Who knows if you really like it? But it would be
SoFi.
SoFi. Boy, is this consolidating.
Yeah, this one is the opposite of hood.
This is what I mean. Like, it's not the opposite of hood. Well, at least hood got the bounce.
That's what I mean. Yeah.
Yeah. So it didn't even. Why? Is it more rates? I think that's the difference. The difference here is that it's just obviously more sensitive to rates. That would make a lot of sense. But yeah, here we are. Generally speaking, still, the last support was like at 14s. I think this is more like 16s. So slightly higher support, still building a base. $20 is overhead resistance. It is, it's going to come in and slightly retest support again. So this sets up the same as the rest, is like maybe a little bit lower. Probably in anticipation. Honestly, dude, it's probably has a lot to do with the FOMC minutes tomorrow. Like, people don't know what they're saying behind closed doors. When's the next FOMC?
It's
probably not
August. No, September, I think.
I just feel like this whole rate story is not a reason to get scared right now, but the market is.
Yeah, September 16th. No, I agree.
I think you're fine. Like, just sell some puts. Sell some puts on SoFi and collect some cash, man. Long term, like leaps, essentially. Sell some $14 leaps, man. Have at it. If you can get enough for it. You might not be able to. This has already gone sideways for 175 days. Seems like a while. Reddit. Oh, we got a super chat too. ASTS Reddit.
Oh yeah, ASTS. Let's do that.
We'll do that next. Yeah. So Reddit. Yeah. Post earnings. This is decidedly. I hate to keep saying the same thing over and over. Sometimes the best trade is no trade at all. You ever heard that before?
Oh yeah.
It is dude, all of these are gearing up for a big move. But like, I just don't want to anticipate right now. Right now, as long as price is below 160, honestly, the move on Reddit. Oh shoot, you have this on the combine, huh? Is to the downside.
Yeah. I think, well, again, the earnings fears are still there, even with the S&P news. And it's volatile.
I don't think I reset the timer. I mean, this is still, a lot of these names are coming into my thesis of like the beginning of the year, where like this year will be the dip to buy.
You said October would be, it would be a typical midterm October bottom.
Late Q3.
Like, imagine we haven't seen the bottom for the whole market this year, bro.
You stop that right now.
Could you imagine March was not the actual bottom for the S&P? No, that would be crazy. But like,
you don't know.
But like 6,900, 7,000 retests would be ugly. But I mean, that would be your
so viable. Like,
yes.
It's so viable. And we're so far away from that right now, which means that it would be so painful between here and there. But my God, I would want to buy the crap out of this.
it would be so painful to see that happen.
He's trolling you guys. It's just typical of Mitt right now. but yeah,
but could you imagine 6,800 after being in the 7,000s
I can absolutely
for like 2 months?
imagine. I can absolutely imagine it. Like it's just a total, we call it like, look, yeah, absolutely.
Nevius will go negative. Dude, no. 6,800, some of these stocks would lose like 2 years worth of gains in this. This leverage that we have. Like Micron will go to 300. Like it would be so.
This is like yesterday on our stream. I was talking about Leopold, right? Leopold, whatever. Listen, it's funny, but not funny. But funny because if you look at what he did, like if he just bought what he bought when he bought it, and he sold exactly the same thing, the same time that he sold the same amount that he bought initially, dude would have made a fortune. Period. End of story. And I think Leopold's story is like many other retail traders' story in a sense where the problem is that you keep buying every single dip all the way up. And if you do that, you have to know that at one point buying the dip stops working. And I'm not saying that is where we are at all, but I am saying that he had an amazing trade, but he screwed it all up by continuing to lever up the entire way through and not really collecting those profits, right? Like, period. If he had just, sure, he's not going to catch the top, but if he had bought what he bought when he bought it and sold everything exactly the day that he sold, no change, dude, amazing trade, right? Like that's like, congrats, dude, amazing trade. And that would have been good, but no, it was about how he managed it throughout. And again, it doesn't, this goes back to kind of what we were talking about on that basis point episode, which is funny because it doesn't matter how good of a stock picker you are, or even a trader that you are, or as good as reading the charts. It doesn't matter. The only thing that matters at the end of the day is how well you're able to manage the trade and the risk while you're in it. And that is a perfect example of exactly that.
Yep, I agree.
With target, I heard you talking about the what are the options called? The
flex. Have you ever heard of this thing? Flex.
Yeah, for sure. It's the flex options are off-market options. They're horrible for liquidity. It's what like Roundhill and whatever. The option income ETFs. You know those? Yeah. Those all use flex options. So basically, you cannot see it on the regular option chain. They're a whole nother chain. It's like dark pool, but for options. Liquidity is horrible. They're typically overpriced, and you typically don't have.
So why would a fund manager buy them?
Because like if you have a like an ETF that does option income ETF, flex options are regular options. You don't have expirations every day. Let's say you're supposed to do a payout on the 1st. Flex options would let you do a December 29th covered call, right? Whatever day you want, like you make up the terms, but you're probably the only, you are the market. So you have to let the market maker make some juice. Like they get to make some money, which is what I meant by liquidity. It's like you're in and that's it. You're not really, you're not easily able to trade.
So why do you think Leopold bought them? Like they didn't need a different type of
leverage.
The
only reason that would make sense is if he got some weird advice from someone that runs maybe one of those ETFs or is basically saying, hey, look, you will be off book. So people cannot follow your trades in that instance because they won't be able to see your orders. Like that to me would make sense. And if he wanted to be in and out, basically, if he wanted to be in and out without everybody else knowing, you could do that. He tried to hide. It's possible.
I mean, it's kind of crazy, dude.
So exactly. Customized derivative. You can decide your expiration date, your strike, whatever.
Dude, imagine he had like Nebius $2,000 strikes or some shit. Like he was just like, yeah, just give me the highest strike you got. And give me that option. Because that's how you go from 250 to 50 or 100 billion at one point he was managing, right?
Yeah, but I think it's a lesson for everybody. It's like you can have the greatest picks, but it's really at the end of the day, it's how you manage your risk while you're in it. And yeah, you can be investing. It's all risk, right? Walking outside is a gamble every day, right? Just like being in the stock market, even if you're investing. And so it's will I have cash to buy the dip if it comes, which if I get a dip, I want, number one, I want to make it count. So give me my meta at 350 because that'll count, right? But you know, a little dip that's not really going to impact my cost basis, you know, whatever. It's not that big of a thing. Same thing, you know, do I want to get aggressive on a potential Reddit breakdown here? Like, dude, it's right into support. So we'll see, right? We'll see. Reddit at support, TBD. Here we are. So far, it's holding. This is a 2-day stent that makes this chart look really good. I'll just say a 2-day stent on Reddit in the opposite direction is going to make this look, I'm sorry, a 2-day stent that makes this chart look really bad. A 2-day stent in the opposite direction on Reddit come this time next Friday or Friday could make this chart look very good. So just chillax for a bit. We have a ways to go before a lot of these charts are ready to make a big move, but it is a good time to watch and make your shopping list. ASTS. So similar to the lab of rockets, I think. Let's get this cleaned up. So from extreme high to extreme low was $10 US, right? If it was like 10 rupees, I don't know that I would spend as much time. But 68.09 is again nearest term support. So what I'm doing is I'm measuring extreme low to all-time high, like all-time low to all-time high. I know it's crazy, but that's where we are. $68.09 was that prior support. We are on it here now. Again, support is it's not a hard line in the sand. It's more like a trampoline. So you jump on it. Maybe it goes through a little bit, but it's this long-term support is this entire general range with the deepest support being sub 50, believe it or not. So that said, this trampoline of support for ASTS can go this low, but it's just now having bounced out of it. We want to see, okay, does the momentum bounce it back out? And resistance is up at this area right here. So whatever that 85. So that's resistance. So if we can get over, call it $70, just a round swag. You could probably take this move right here for a trade like that. That should be a quick one, but we're not quite there yet. Conversely, if this falls, do expect a retest of the deeper support area, at which point you should buy it. I would buy it, but we are also not there yet. I say you should. Is not investment advice. Sorry, I should have worn my NFA shirt. That was not investment advice, my guy. But that's what we're watching for. So on that first tier of support, deeper level support is below us. If it does lose this, then expect that. But watch here now. If it gets higher, like Intel, if it's higher, then we can actually crack to the upside. I love it. I have an irresponsible amount of ONDOS. Can we analyze this chart? I mean, it's relative. Also at resistance, was at resistance. So this is what I mean. So you're consolidating, right? Like this is resistance, clear. I say clearly, probably not so clear for regular people. And 850 is support. The last time it was here at this support level, support had broken. So just as an aside, that right there, that's what broken support looks like. And when you break support, you flush to the downside. And then in the future, you expect it to act as resistance. This is very typical of price action. So one time tested right over there, support became resistance in the future. It pulls back yet again. We measure this pullback from this low to this high, and we usually get about a 50% range, which when you look at this, you know what? About this area, about this area is when I pull these drawing tools out is always what I'm highlighting. And if it can get out of that, look at, I'm just walking this through. This is funny. If we can get out of it, cool. We can go back and retest that area one more time and we watch. In this case, that's probably a week of watching. Finally, you get a breakthrough one more time. Does it continue on? If it doesn't continue on through our areas, then the momentum is stalled. And when it can't go higher, it needs to go lower to collect more buyers. And that's exactly what has happened. So in this case, it is a break retest, assumes some sideways consolidation, but if this cannot go higher, still, it must go lower still to collect more buyers. And maybe that means somewhere around the $7 area before it takes another shot at all of this and ultimately goes. So yeah, you're at a very near-term support, a bit of a pivot, but market dependent. I think this is going to be more aligned with that risk on, risk off mentality. If you look at the other momentum trends, like the SMAs, same thing. All these SMAs are consolidating right here. So to my point, if price is trending lower, it's not going to be fun. But if price is ultimately trending higher, cool, we're good to go. Which means no trade. If it's an investment, it's an investment. Stay invested. Otherwise, you don't want to see this lower than, I think across the board, we trade against these July lows. So if it's holding July lows, all good. If not, expect this here, 7.5 to be your next spot that it needs to pull back down to before it can get back up and take another shot. Cool. Long-winded way of saying what? What did I say there? I don't know. Zeta. Sure. Sell calls. Sell calls. She's gonna come down. Sell calls. She's gonna come down right here, right now. Probably to 25 if I swag it.
Yeah. If S&P drops another 0.5%, 2%.
Yeah, I like this company, right? Like, and I like the thesis behind all D2C advertising in general.
But I also think that 30 level, psychologically, we break that, it might be off to the races.
Yeah, yeah.
And it's pretty damn close.
In this instance, I would sell higher calls. So like we would do on what's it called? Hoodie, when it's losing 130 or whatever, or
right,
whatever you want to call it. So without taking the extended hours on, what I'm doing is just from a day-to-day perspective, taking this high to this low. This is going to give me my bearish retracement. So this is an example of being a good bull and knowing where the bears are. So the bears, as of today, are stepping back in. And so any bear that shorted in this general area here is taking it one more time. So if this is below 27, this is where I'm getting this 25 area from, is that would be a retest of that bearish retracement in here. And essentially, so this is longer term, looking at a retest of that high and ultimately this high. And where this was resistance, I would like to see this show up as support right there. And if I can, cool, then I'll expect a little bit of bounce. So small pullback. This is definitely happening if it's below 27.50, which is right here. And then I would watch. I would watch to see if this can hold it. If not, then you're probably coming back to the 20s, to the deeper support in this area. But for right now, one step at a time, 24.50 is nearest term support right now. And I would probably go like selling like $40 plus calls to get actually some protection if that happens, and also still stay in the trade. Oscar, that means longer dated. I hate to say that Oscar's going on hold too. What's happening here? What is happening?
Pumped after earnings, then dumped, then kind of pumped again. But it's still up a lot this year.
Yeah, 23s are support area. Right in here. So that's the same. It's the same bearish retracement, by the way, that I just did with Zeta, but it's playing out the opposite. So from high to low, this is where the bear zone was. And then eventually that bear zone, so they would short here, and they were right to do so for a while until they weren't, right? And you get a breakout. This now, we're looking at this general area turning into support, which was resistance. So all this over here, is it going to hold as support? Which means that like I could get another retest into this area before I actually break out. It's a very long, a lot of time on that chart, but yeah, it's fairly thinly traded up here. I don't hate it. It's not broken down, but it's at resistance, just the same. 37 being resistance, 23 and a half, 24 being nearest support. This just being a pivot. Cool. Next.
Amazon.
Amazon looks like it's going to come in hot also, potentially try and take that. I mean, is this obvious or not? Like, here's the earnings. I'm honestly asking. Like, so here's this earnings move.
It feels obvious because this is what happened exactly last time after earnings. Almost, it literally popped up to that 280 range 6 months ago and then fell back to 230.
Yeah. Like, again, I want to say obvious, but I don't want to be disrespectful. I don't know if that's a thing. Is that a thing? Doesn't matter. It is a higher high. So that's the good news. So higher high, higher high, higher high. Trend is up, right? Low, higher low, higher low. That means that another low can be as low as like 240 before we make another high. That's still within trend. So it's at this one pivot from right here, like that kind of center line of that prior breakout. Any lower below what is essentially going to be the 20-day simple, then yeah, this is going to pull basically that entire earnings move back. Earnings was this day to here, and as of today, I believe, I'm going to zoom in, the day one earnings move. Oh yeah. Oh, it's already happening. Okay, so day one earnings move 250 to the 50-day and potentially 240 to the 200-day. And again, still in consolidation. Trend is not broken, by the way. Still in an uptrend as shown, but pulling into support around 250. Like that. Consolidating. That's what that looks like. I'd be happy here buying a small dip.
SanDisk.
These, I should have looked at SanDisk. Yeah. So
it's from 1,000 to 1,800 in 2
years. Yeah. But like big moves, right? So here's my point. I've done this a bunch of times already today on a lot of charts, right? So we have this big breakdown, right? Like big breakdown. And then you have a 50% plus. What was the bounce off the lows on SanDisk?
Did you call it ScamDisk?
No, I would never say that.
I heard ScamDisk.
I did.
Why is it a scam?
I did not
Why
say that.
Why are you a hater?
What are you talking about?
You said ScamDisk, bro.
No.
Dude, you said, was that just me or did like he heard ScamDisk?
Bro.
What did they do to you, bro? But yeah, the jump was like 80% as of yesterday from the lows.
Yeah. So like
almost double.
Yeah. So, but so I've gone through this a bunch of times. So then we look at this. Yes, technically, by the way, this is a higher high, right? From this last, higher than this high. So the structure is broken. And at this point, we know that this is measured from this high to this low. This is the bear zone, the bearish resistance right in here. So bears showed up one more time where they should have. This is the same thing as Micron. And now we kind of look for a pullback. Now the pullback could happen like as of today. So tomorrow, I think it's very important to see the memory names. So if the trend, the only reason I'm not like saying that these are actually going to come down, which I don't think they necessarily are, is that if tomorrow, which is TBD, we have the theme of semis up, software down, just like it'd be so obvious if that happens, then all of these names are actually going to be up immediately. That said, if you're in a trade long for a SanDisk or I actually have a DRAM trade on, I would just stay the course right now. I don't think there's anything to see today, especially if tomorrow we just continue back onto the upside. But that said, the kind of like process that I've been talking about and charting pathing of a reversal is what I'm doing, is that we take this measurement essentially from here, and then now that we have a local high, we kind of just like target that, you know, somewhere around the 50% range, and usually that's going to align, and I'm just swagging this, to some kind of low before the very last low. You know, it's almost like you could see it, right? And that's like 1400 on that volume profile. Again, it's almost like you can see it, which will probably align with the 20-day. And I get this is context of the chart, so context. And then if I get price to actually bounce around 1400 and start to get bid up, then I have confluence and I have a trade on my hand that actually takes me back up to this area. But that means that a better dip buy, just like all the rest, is a little bit lower before we can go higher. So long story short to say, we didn't have enough buyers yet, so we need to go back down, collect some more, and see if that's enough to break this high, which would be typical.
Palantir.
And I would never say, I don't know why you said that. We can look at microscam too. This one,
Microsoft, then Palantir. Go ahead.
You know, so Micron is exactly the same. I got that from the chat, by the way. Exact same chart and exact same setup. I've actually already outlined on this chart the dip buy area. It's in the 8s. Did we do Micron already today?
Yeah, we did it already.
Oh, so same thing. So exactly the same. All right, what was the next one?
Palantir.
Oh, Palantir. I kind of like defense. Still waiting to see. It looks a little toppy.
It's holding 170. It has been for 2
I'd
weeks
sell
now.
some calls, my guy. I would. But I don't hate it. We are in the bear zone, bearish territory right here, right now. They are taking advantage. So there's a little pressure. If we can't have a sound clip of that Queen song, Under Pressure, dude, that would be so cool.
Copyrighted. We should. Yeah.
Wait, if we play it, can we just pay them?
No, dude. The record labels, they get so upset anytime
Man,
YouTubers play it.
Under Pressure. Can you
can
give me
sing
the
it.
lyric? Give me the lyric.
Oh, I don't have lyrics. You gotta have the lyrics.
Oh,
I'm just getting into. The only lyrics I can give you is from Bohemian Rhapsody.
Oh, dude.
It's the only one I know fully right now.
All right, 165 support. So could not get through 180. That is resistance. That resistance comes from this area right here. So the weekenders that bought this dip over here had a moment after a epic drawdown of probably to the tune of 50%. Decided, guys, that maybe they'll trim their positions now that they're nearly break even. That's what the chart's saying. And from here, we'll have to see. So this actually looks like it's going to come in at least to 165. You want to hold 165. 165, I'm just annotating on here. It comes from this area. There's a lot of pivots also, right? So if 165, when we get here, it's going to retest this big zone. If they buy it or new buyers come in, that's actually going to be generally positive. So, but the process at best is going to be some sideways action, which is why I just said to sell calls, because the process, if this is bullish, if this is to be bullish, you want it to come down to 165 and you want it to hold 165, which means it's a couple dollars lower. So I think you're free and clear to sell some upside calls and collect a little premium in the meantime and hold your stonks. So that said, that's where we are. If it loses 165, then we are looking at a larger pullback. But again, long term, get this, where all these SMAs are, as long as this is holding generally longer term over this whole range of 150 to 160, like imagine 165 holds, right? Imagine 165 holds for just a minute. That's up in here and priced at something like this. Where's your 200-day SMA going to be? Your 200-day is probably going to be somewhere around here. Your 20-day I'm just going to use orange, is going to look like this. And your 50-day, which would be blue, is going to be looking like this. And so the process of that is actually going to create that expansion of those SMAs right here. That is, in fact, how you get higher. But that means you got to go lower first, or at least minimum hold, and look for another higher low. So near term, take a breather and see if the buyers step in and create a higher low from here. Tesla not selling off. I kind of like it. You asked me the other day. I'm interested. You asked me the other day if I was really interested in this after it had made like a bigger, what was it, this move? And I was like, oh, well, we're going to wait for this here. But I was like, at 310, if I saw it at 310, it wasn't here. It was this. And I was like, at 310, I would like it. And I got a 310 and I kind of took it. And so we're up here. I don't hate Tesla. This was very nearly like one of those bigger pullback areas from this one. I don't hate Tesla because there's nothing good in the stock right now. So what are they going to sell off? At 335 is important right now. It's literally trading on 335. That is that's these tops right here. So this is the prior breakout. And so this is what I'm looking at. So if this 335 pivot here becomes support, which literally today, or last night it did, if it can continue to hold, then I can see this breaking through into 360 through this gap right here, which in that instance, I think if it does do that, it would be a very quick shot to the upside. Almost, so this is a good trade to me. It's a very good trading location. I'll give you this. It looks like it could retest that 415. So my point is that if Tesla actually does hold this and start to recover, this kind of move into the 400 to 415 area, it's very typical. And that from just a percentage, it's like 25% on stock alone, equity alone. This looks like a good swingable, like a good swing trade area to take a long shot on Tesla, with a tradable low. Let's say you don't want this below 325. So literally like that, this is a very tight risk reward, 7-1. 7-1 is a very good risk reward on Tesla here. So I do like Tesla, actually, and I'm already kind of in this dabbling. So yeah, I don't hate it, man. I don't hate it at all. At least for a dead cat bounce. And then maybe that becomes bigger than a bounce. This is one of those moments where it's like, I'll just prepare for a bottom. It doesn't have to be the bottom, but a bounce. And I got a bounce. I'm just looking to see if it can continue its momentum. So far, so good.
Okay, let's put 1 minute on the clock. We'll try to get through the last 15 or so tickers. Then we'll be done for today. If you are not following Jason, I'm putting his X in the description. At the end, he'll talk about his webinar on Thursday that will be free to sign up to.
But it's not this Thursday. Yeah, we just sent it early. So it's an early registration if you want. It doesn't cost anything, but put it on your calendars. It's like the 7th of September. We'll do it after the next NFP.
A few weeks from now. Okay.
Yeah.
Cool.
Yeah. Couple weeks.
Okay, cool. Cerebras.
That's a hard one. High volatility. Cerebras, extreme high volatility. You come in as support. I think this has a lot more to do with the share float and like fundamental valuations. So I would lean on you a little more. Resistance is as high as 300, 310. Interestingly, okay. Look, dude, I don't know why you're doing this to me. I don't really want to go long Cerebras, but this is really interesting. This is a daily chart. So it was a prior breakout here, pullback, retest, and hold right now. So this is the sideways action. I mean, yeah, as long as it looks like it could be doing that. Dude, you really have me saying long Cerebras?
I hate the valuation, but
Do you? I don't know. That's what I'm
Like,
saying. So like, if it's
a
that bad,
stupid valuation, dude. It makes no sense.
yeah, that
It
if it's
kinda
that bad,
does.
it's that bad. And so
If you think inference is like the most important thing, then yeah, I mean, it kind of makes sense.
it could be, but say sub 200. I mean, the low end of support is 160s. So let's do this. If we have from this low to this high, support is 200. So that's your lower end of support right in here. You're on the first level of support, which has been established for 3 months, almost nearly 3 months. This has been prior resistance, now being retested, coming back down from the highs. So we'll find out.
App loving.
I closed. I actually took a shot on this the other day, somewhere like right over here. Yeah, and I closed it. I think I closed it yesterday and actually retest. Same thing, like confirmed. So not yet. I don't hate this, but I think you can get closer to 250s. I actually I take that back. I might hate this. Honestly, longer term here, I don't think this is it. I don't think this is the one. And if it is, then you have a little bit more to go. Sub 268, and you're testing a pretty heavy pivot right now. Is a nice spot, but support is deeper. Honestly, like a little bit deeper. This one at 3/4, and I have a little bit more fundamental view here, but we can skip it since I'm out of time. I think you just wait on this guy, because if it gets worse, it could get a lot worse. And I don't know that there's a reason to step in front of it. And you got 3/4 straight of 1, 2, 3 not working out. The story's a lot more complicated than I think you think, that most people think. So I would wait.
SK Hynix.
SKHY. Yes. So basically, we've just charted DRAM. We're just missing Samsung, right? I can't chart this SKHY. I cannot do that. It doesn't make sense for me to chart that SK Hynix. I need this one. Cool. I need the actual chart. Yeah, so 15 right around here was support. It's got to hold that 1581. Otherwise 1250. Otherwise it's another 30% downside. So now I have my bearing. Yeah, you're 150 support. Otherwise it's back to 100. 145. Swag it. Cool.
Microsoft.
So Mag 7. Oh, she's weak.
Dude, it was a 520 last week. That's the annoying
No.
part.
520 was the upside target. You're good, right? So it's, watch this. Watch. Same exercise. Extreme high to extreme low. Look, how many times do I do this? Where's the bear? Where are the bears? Right here, right? So you're over it slightly. That's fine. Is it? We talked about it last week or so. Do not sell your long-term equity, but I literally said last Tuesday, take profit on a short-term trades up here. This is why. So now you expect at least, something to come into this support area. 455 is going to be that downside support near term. Is the nearest support. So 455, expect that. Ideally, what was resistance right in this area will become support right in this area. Ideally, we don't know yet, so you'll have to see. I just don't want this to happen in the future, but this current move is over, and now you need to see the stock kind of like pull back a little bit, but base and you can give back some. You don't want to give back the whole thing. If you give back the whole thing, then we're talking about the same thing. We're talking about 450. We're talking about half of this retracement is 450. No problemo. Expect it. I would hope that holds. I I actually kind of expect that to hold because I'm maybe overly bullish. That's just me. But I like 450 for support. Otherwise, this goes as low as 430. I do not want to see it below 430. Good thing is right here, this little profile on my right-hand side of the screen, look, clearly resistance, right? But also clearly support, right? Support. Ta-da. So below 450, as close to 430 as you could. I like it long term. Moving on.
Fastly.
CDNs. So Fastly, same exercise one more time. You can't see it. Well, see it here. So 25.28 support near term. I don't want to see too much lower than that to keep this general momentum. If I do, then you have a $20 support area. That is the deeper support right now. Akamai, though, I think is like the two CDNs. I kind of like Akamai. But 25.28 is that nearest level support, very close. Trend is intact, just like Microsoft, just like Amazon, just like the rest of the market. I think we just moved quite a bit to the upside in very short order. Expect a little bit of pullback and maybe get some basing action, and then hopefully by the next week or 2 weeks, then we're back on the mend and making new highs. That's what this all looks like to me. So I like it. But is that resistance?
Coinbase.
Not a big Biddy fan. Ooh, that's an ugly chart. That's real nasty, dude.
Dude, I think Bitcoin's bottomed though.
Why? You know, when you ask me why, I just gotta say why.
I just like how much. Well, you know, I was actually talking to someone today. Bond yields are up, inflation's up, geopolitical volatility is crazy, rate hike fears are in, and Bitcoin's flat. Like, wouldn't you think after all the bad news keeps compounding, if something's flat, like, all right, it's like the worst of the worst, hopefully is priced in? Hopefully.
Maybe.
I don't know.
We call this a shoe drop. These are the laces. And then you drop.
Dude, you have an emoji for everything on the charts.
It's also called a bear flag on a long term. But anyways, yeah, dude, you don't see it. Do you see it now? So like, here's the boot or whatever. It's actually already like kind of in motion. Your laces, stomp. But anyway, you gotta have fun. Anyways, yeah, you're look, dude, you are under these SMAs here. Your price is slightly extending lower. It doesn't look good. It's at the like bottom barrel support. Let's just do this really quick. I will take this. Oh, it's really hard to get this. So, I already had it. Never mind. Oh, no. It's already broken. So 176 was support. God, I can't say out loud what this looks like. If I said out loud what this looks like, it's going to be like one of those, NVIDIA moments. You remember when I got like super bearish? I don't want to be bearish, but I don't know what the valuation is here. I think you have to come into, I will just say you're at support. You're at big time support. You're below it. You're below the general support area of 175. And this is in an active breakdown. And, I don't know. It doesn't look great. The last time I bought Coinbase, it was 45. So it looks like that's what I'm saying. It looks like this. So we'll see. Does that make sense? I have no idea, man. I have no idea. So whatever reason it got bought up over here for in the past, look, multiple times, is it going to hold? Is that reason still a reason to own the stock? If I zoom in on a microscope, yeah, I don't know. Like we're like, look how tight this is. This is literally on support. What if I add an 8-day EMA? It's about the only thing I could add. If we got like super in the weeds. 8-day. Call it yellow. Yeah, okay. I mean, like this, it just rejected this 150. I mean, it has to be over 150 at minimum. At minimum. This is that volume shelf right here that you basically just lost today. So, I mean, I guess you're going to find out if we're going to repeat this one more time over here. It doesn't look ideal. This is 140 at the deepest depths of that support. Yeah. If it's below 140, then yeah, it's happening. But I can't say 70 or anything like that right now. That's too. It's one of those charts that look like, dude, this is. It looks too obvious to be real. Does that make sense? Like it looks like it's happening, but when it looks like that, it's like, I don't know.
Circle.
I'm not a fan of the crypto space. Like,
yeah, it's fair. That's fair.
Not right now. I think that this 65 is where you're at. And that's that prior support right in this area. I'm, you know, it's just me. I think like, okay, if you like it, cool. Expect that. And then you're going to have to play a little SMA like ping pong. So your 20s, that's about your 20-day right now. So it is on its way to 80s but it's after a pullback. It's a pullback first, right? Like this, maybe. And then you're looking that it's multifaceted. It has to do, you would want it to continue on this way. So that's like into next year. Maybe. Late Q3. All right, next.
Corning.
GLW. Dude, she was looking so good yesterday, but right into that 50. So like this is that SMA ping pong, like 50 days simple right there. 20 days over here. She's just ping ponging. So that is this area here. I'm just totally swagging this like 150. Same everything here, all of it, the whole market made big moves. It's down to the 200, as close to 140 as you can. It doesn't have to be below 150, definitely. Look, so here was your prior support, this green box right here. I'm out of time. Oh no, I didn't say that. But now this is resistance. And so that's what you just saw. So you just saw like what was prior support, all of this. I mean, the hard truth is that they just sold it. And so now what you have to have happen is you have to have buyers step in, and the process of bottoming looks like that. So for those reasons, yeah, I still like it, but I like it if this process of bottoming out happens. So as close to 146 as I can. I like this to show up over here one more time. Sorry for all the lines and whatever, but yeah, that's generally speaking, it's got a little ways to go because this resistance is showing up one more time right here at 180. So pull back a little bit after a big move, hold, attempt it one more time, and eventually if it can get through there, cool, but it's not there yet.
This is a new one, defense company, LDOS.
It is a new one. To me.
18 billion, American defense aviation, IT.
This is like a, so defense is actually doing well. So like all of this is it's a pretty clean break, right? Breakout, essentially a retest from the breakout area right here, which was resistance for so many years. This is years because it's a weekly chart. Now support. I think we actually do the opposite of what we just did go through the same process. 165 is your overhead resistance. That's going to align actually with your 200-day simple as well. So would actually expect something like this. That's what this chart looks like. Unless there's some other fundamental situation that I don't know about. Technically, this is that's long-term process of something like that.
Qualcomm.
This one's at the lows. It's literally here right now. I am not opposed to the Qualcomm. It's on my spot, but it's below like most of my. Dude, tomorrow, this looks like the setup is after we get these FOMC meetings, like minutes, that we get another semi-day. So get this. Big dumpster fire, right? We do the measurement one more time from the lows to the more recent, press after a big, what is that, 145 to 170 move. And then you get a pullback about 50%, literally 50% at 156, but this goes as low as 153. So you get a pullback into this general area, holds, and as it's coming out over 156, we can retest this area one more time. So actually, Qualcomm looks like this to me. I'm watching Qualcomm kind of do this. If I see that literally at 156, if it breaches that, I'm going to look for this. I'm going to look for this setup here. And it won't be until it gets to this point that I will actually take it long. And I'll end up taking it long like this. So it's coming to me. I'm just going to be a little patient. Same thing with Corning. They're coming to me. All right, next.
Uber.
I'm long Uber right now, actually. I think I was building. I had a decent move into the 80s. I think this is, so I kind of like, I like the idea of with Tesla and Uber, like not being in the middle of the AI storyline at this moment. So like being a little bit outside of that long term, like this is the massive support that Uber is built on. So I think that this actually builds into that 85 plus towards the end of the year. So that's actually what I'm long for. And off of this low, I'm looking to get through 85 in the next like month or so. If it can get past this 200-day simple, right? So right now, support is in that 72 area. I like this build up. Again, looking at those SMAs, they're tightening. So it's in the consolidation phase right here, but I like this tightening. It's going to get squeezy. I think before earnings, we should be in the almost 90 camp. So Uber from here, yeah, that's in a month. We should be closer to 90 than anything else, and I'll be in the money, and ideally that's what I'm looking at. But I do like Uber here off of a very recent support base here, but also from a long-term perspective, this entire like consolidation here is just, it held, right? So I don't hate this. If you're looking for a little diversification, makes a lot of sense to me. Plus, dude, I spent a lot of money on Uber in New York. A lot of money on Uber. And I almost took an Uber here in San Jose the other day. I was like, wow, wild. But
Well, the thing is, you're not taking a robotaxi yet until that happens.
And robotaxis exist here, right?
Yeah,
they do.
They're not cheap.
But,
yeah.
I'm definitely not taking a robo. Have you ever taken a robotaxi?
I took a Waymo once, and it was like $20, and it was like not worth $20. You know,
that's in San Francisco. Well, no, they have Waymos here. Whoa, it's just because. Okay, next time you're down. When are you down here next? Over here. I'm down. Yeah.
SF. I don't know. It's gonna be a while.
San Jose.
San Jose. Yeah, probably next year, early next year.
Oof. when is the next time that you and I will be in a city together where there are robo taxis? Because we need to take a robo taxi together and do a little vlog.
But like I did it before, and it wasn't that special. Is my
A
point?
robo taxi?
Like,
I've never done that.
oh, you mean a Tesla one, or
Yeah,
no, I've never done a Tesla one. Yeah, no, that I would.
I want to do it because they have them.
Maybe
here.
Austin.
They're-
Maybe Austin.
Are we going to Texas again? I mean, they are here in San Jose.
Oh, they're in San Jose. The Tesla robotaxis are in San Jose.
Yes.
Have you? Why haven't you tried it?
I don't even. I wouldn't even know how to do it.
People are like, oh, it's so easy. Dude,
This
it's
is the
people are like,
problem.
oh, it's so easy for people to download an app. It's like, bro, if people don't have the app,
What
like, they
app?
just go to Uber.
What
the
app?
Tesla app. The Tesla app. The
I have the
robotaxi.
Tesla app. Hold on. So let's do it. Well,
That's crazy, and you still used Uber over this. That's crazy. And
why?
it should be cheaper than Uber because they're subsidizing a lot of the.
Okay,
rides.
I have to download the Tesla app because I don't have it. So app.
See,
App
people
Store.
say downloading an app is not that hard, but it's
Okay,
not
is it
that easy to get
Tesla?
hundreds of millions of people to download it.
Tesla app. Open. What it said? It's not. It wasn't even searchable. Okay. Oh, sign in. So I have to sign in, or I create a continuous guest. Continuous guest. Charging network.
Well, the
Model
problem
3.
is it's probably
No, there is
geofenced
no-
around
there's
the
no- okay,
location.
cyber. No. Where's the cyber taxi? It's not even on here. No, it's not this app.
Distribution is not going to be the easiest thing in the
That's
world.
what I'm saying, man. It's not here.
And even if
Go
it
anywhere.
does become, even if it does threaten Uber, it's going to take some time. That's
It is not the Tesla app.
It's a robotaxi app.
It is a robo-taxi app.
Yeah, the Tesla app is to open up your Tesla.
See, there's Elon. We're already getting some friction here. Tesla
I know,
robo-taxi. Got it.
Download it, and I want to see if you can actually call a robotaxi near you because San Jose is relatively
Dude.
large.
I've seen them on the road.
I want to see how open it is for you to
I have
like
to
go
create
anywhere.
an account.
Okay, that's gonna take some time. We got it. Yeah, dude, I agree with you. I think Uber's cheap. It's gonna take some time for Tesla to kill it. But this narrative, dude, it's a risk. Every time Tesla has an update, Uber's just gonna go down 2%.
You think
And
so?
I mean, yeah, I mean that's what, dude. From March 2024 to today, it's been at $74. Like it's been the perfect call to write calls on, but
Yeah.
or sell
Yeah.
puts on.
I think because it's been like that for so long, I think it's time to not be like that. Hopefully.
Yeah, I agree.
Okay. Verify my email. Oh my god.
Okay, let's just do like the last few tickers, then we'll, because I got to get out of here too. Can we
I
do some of the
wanna get-
photonics names? AAOI. What are you thinking about optics?
Well,
right now?
that's exactly what I was thinking. What my guy, right? One. Did you see DoorDash?
The stock.
Yeah, Dash. Okay. Did you know that I could DoorDash like electronics or for New
you
York?
DoorDash anything. Yeah,
Dude, I actually used that. That was amazing.
dude, I
It was
DoorDashed
really
like a
good.
wine opener a while ago. It was easy.
Oh, yeah, we talked about this. I spent so much money on DoorDash recently, like an obscene amount of money on DoorDash in the probably multi thousands in like a month's time. I shouldn't say
That's
that out loud.
crazy.
I'm sorry.
I was just like, well,
I didn't come into my mouth. I'm like, damn. But no, AOI, I don't hate, right? Like, so it's all the same, man. It's all the same. I think we've just come off the bottom significantly, like right into this bearish resistance, just like all the other charts. It's exactly the same, right into overhead resistance. Expect these pullbacks, right? Like expect a pullback from here into that's 107, right? And then can it actually, then if buyers do actually show up here at under 117 down to 105 in that area, that's a perfectly acceptable technical pullback. You want to then see buyers actually show up, right? If they show up, that looks like sideways price action for a day or two, and eventually you actually get a little bit of a breakout. This is price action. This is normal, right? So you expect down, sideways, up. They run, they rest, they run again, they rest again, and they run again. and it'll take another shot at this overhead resistance that is as high as 175. Even in this instance, if AAOI can get that high, it'll at least make a new high, right? And then in that case, you still expect another pull like drawdown, but you want to watch for a new high showing up probably around 150. But this is the process of reversing. It's not an event, it's a process, but you can map it out. It's like perfect. So what was the other one we were talking about? Anyways.
Lumentum Light.
Oh, LIT.
This one took a nasty hit today, but they're all in the same bucket.
Yeah. Dude, it's exactly the same, right? So like this is, I mean, it's holding up better than the rest, but it is the same as the rest. So 835. Again, exactly the same. 835. It's definitely more interesting than the rest because 835, I have a lot of buyers here. The drawdown was pretty tame on this. If it's below, what is that, 7 and change, then you expect this drawdown just like you did over here. Like that's the big caveat is if you lose that 835, this is what I'm talking about. 835 here. Then you have the lower level of whatever this is, this support here. But if you break it, you should expect a significantly heavier drawdown after that. We're not there yet. For right now, for all intents and purposes, the price is still telling me that support is around that 835. So if it can hold and do this, it's all good. You just want to be cautious that you don't want to have that happen, which is possible if it breaks that sub 800 level.
Okay, Salesforce, ServiceNow, those two.
I mean, they're good trades today. But they're lower high. Oh, dude. Okay, so software, yeah. This is a lower high. Shoot. No. 175 to 170. I missed this. Dang, I had a feeling too. Are you doing this on purpose? I think this is a short. It's a short-term short into the 50-day like this, at which point you can get long again. But again, it's the process. I think you look at this tomorrow. So this is it's a lower high after a lower high one more time. So I have double 1, 2. And so any lower than 190-ish tomorrow, that's when that would initiate this kind of move to the downside, at which point that's support. You could buy it again. This is you know what? Also, oh man, for sure. Sorry. This is a catalyst after a big move right into earnings, short covering ahead of the report, August 26th. In 10 days time. Yeah, they're going to take some profit after a big move. It's up 100%.
From the lows? No, it's not.
Oh no, 30%.
Yeah.
I thought I read 100%. 38% off the lows. 38% off the lows. So yeah, pulling back to 170s-ish, 175-ish. Par for the course.
Oracle, kind of similar, but not as similar.
Scared to look. Ooh, similar, but not. Yeah, similar. Closer to support. This chart I've not liked for a while, but you know, if you get this, that would. So on an Oracle, I'll give you this. On Oracle, that's 135. It's slightly different because this was the prior high. So technically, this is a higher high. And so if this is the last low, this looks like it could be a long into earnings. So low, broken structure, we call this. So higher high, that's a break of structure. So now I'm looking for anything from here to lock a higher low and ultimately make a new high. And that's how I would actually get this, which means that unlike going long in a breakout, you want to go long on a retest of support, which is honestly going to align to this 135 ish level. Let me get some more confluence. Here, boom. Yep. 137 to 130. That range aligns. Jeez. Near perfectly. Have at it. Not below 130, but as long as it's over 130, have at it. Swag it.
Okay, last two, VG.
This looks long. It's still long.
Dude, if Trump is ready to keep this new negotiation structure going, I think VG could get back to 20.
20. Okay, well, I have 15 and a quarter. Is that cool? Is that good enough? I don't know.
I mean, if we see 95, 96 on crude, like.
Yeah, I think this is fine. Is VG? I thought VG was nat gas.
Yeah, but it's honestly, it moves with crude. Like, you put a crude chart on top of it, it's almost identical. Like this spike up from 10 is because of the spike on crude from 65.
They call nat gas the widowmaker. You know that, right?
Yes.
Okay, cool. This looks like a long. This looks like it's an active. So this is a breakout. After a retest here, this looks like a long term. If this can hold over 16, which is a ways away, I mean it's a couple dollars away. We just had earnings.
The one thing about these guys, Chris told me yesterday, I didn't realize they have 2.5 billion shares outstanding. Like it's hard for this thing to move.
Yeah,
which is why the oil
it's as big of a market cap as Cheniere, which is
why when they went public at like $40, it was kind of stupid. Like I don't understand how they justified that.
35 billion market cap. Yeah, it's a big time. LNG is Cheniere, right? That is
yeah.
The same.
I mean, if we get a really big move in oil, maybe we see it spike up. But
so this is a 56 billion. This chart looks good too.
Yeah, I mean they all look good because crude looks good to the upside.
Right resistance. Next does not. So maybe this is catch up. No mustard.
I've been looking at Next a little bit more. I feel like long term.
I think it's worth it. Definitely worth it.
Yeah, not as a hedge, but like in 10 years.
Yeah,
they're going to be very, very important.
Yeah.
Okay, last one, gold.
What kind of gold?
You do GLD. It works.
Oh, gold, the asset.
What do you think I was saying?
Oh, I don't know. Barrick gold. I don't know. No. So, okay. No good on gold. Your pop is done. Now it's a short.
Are you sure? Because there's momentum on gold.
No, there's not.
I mean, there was in the past 2 weeks. It had like 7 sessions in a row.
No, it's over. Well, like so definitive. Like, why is he gonna be like that? I was just gonna go long. No, this is short. Look. So, like, I mean, you could watch the dollar, maybe. So this is like breakout area, generally speaking, right in here, and then you get the big, push to the upside, which we all know. I mean, if you zoom out on this chart, it's significant. Right here, right now, you're retesting resistance. So again, it's the same kind of thing as like, all right, you want to measure like the pullback. So that looks like more closer to 380, at which point you could probably come in and maybe look for another bounce, but it's a short-term top that should produce at least another low. In this case, though, I wouldn't expect this low to hold. I would actually expect this, like, thumper. Possibly. There's a lot more to go on that. I will have to see, but this is like near-term double top at resistance, technical, like short right there. Right off of that, aligning with this. Yeah, you're technically at resistance, expect to pull back, expect it to come back in halfway, which to me, You're reminding me. So I said 380. I'm going to stick with 380. That's about the 50-day down here. I would go to GDX short, back on, boom, there it is. Yeah, I would reload this gold miner short, actually. Nearing resistance, same thing. We'll see, but like if these things go any lower, miners have the highest cost of oil. We know oil. If we think that oil is going to stay higher for longer, that's their biggest operating cost. Was like part of my thesis. And then gold having topped out, I would expect this to come back and down. And this one be closer to the 55 sub 60 range, which gold, so that would look like this on gold. I don't think I would trade the asset gold, but I would probably do closer to the miner. Yeah, your closer support is over here. So if this gets lost, I'd be looking at that. I don't like this chart. It's toppy. That said, if 380 holds, it holds. But I think I see a clean route to 380. Why? Who's long gold? Somebody long gold?
No, I just think in general it's been running. So people have been. I mean, JP Morgan came out today. They said because of bond yields, we think European equities, treasuries, and gold are the safest places to be. So
if there's a macro thing, okay, I could maybe see it. I don't know. If the market gets on this tear of like the macro shenanigans, it's possible. Yeah, I have 311. I do have 311 as a retracement on gold. A solid retracement on gold. After this is the big breakout that it had. So this is the big breakout on gold at 185. This is the 10-year base, the 10-year cup and handle. Whoop, whoop, break. Extended, full extension, all targets acquired. If it cannot hold 403, literally right here, right now, that is the failure point. At which point you would expect this. And then maybe you could take another look at it. But you would expect something like that. A 50% retrace from, I don't know. You'd have to say.
I wouldn't expect that either. Yeah.
Why?
No,
you do realize that's exactly how gold trades, right? Look.
Yeah, but I feel like gold had its really ugly drawdown in January.
This is 46% after the same exact type of move.
That was 10. That was in a totally different macro. But I agree. Yeah. Like, I feel like a lot of the ugliness happened in January, and now I think it's going to be like I don't think it's attractive here, but it is nice to see it not being a falling knife like it was for the past 2 months.
Yeah. Well,
could it turn into one? Maybe.
Maybe. I think you watch out right here. I would be more cautious than optimistic here now.
Right.
Do I need to go sell my stuff? Jesus. Sorry. Oh, yikes. Why does this look just as bad?
Dude, do you remember in January?
I do. I don't talk about
the amount of people on X that were claiming silver is like the most important industrial thing on the planet.
Dude, they always do that. No, copper is.
No, it was copper and this, and it's just like,
yeah,
dude, like, I mean, no, it wasn't. No one gives.
No, it wasn't. No, it wasn't.
It was important for 1 month. For 1 month, people gave a shit about silver. Now, granted, it ran from 2024 from like $20 to 100, but
I'm just saying all these metal charts, like these look like textbook support turn resistance charts. I mean, like textbook where the heavier shorts would actually show up.
Yeah. All right, folks. That is it for us. Yeah, the see you at 200 silvers. There's a decent amount of that.
I'll see you then. It would be nice.
Jason is hosting a webinar September 7th. I'm putting the link right here. It's in the description. Jason, you can explain what this is. And
yeah, we talk about these NFP levels all the time. There's a system. Sometimes people have a hard time reading like how it works.
I'll be right back as well, but I'm putting the link in the chat.
Oh yeah, cool. Appreciate it. No, so like this will actually go through a whole system. So I mean, depending on it doesn't matter how you trade, but a lot of people use this for selling covered calls. selling puts, things like that. Just general overall like regular income. But also, I think the most powerful piece of it is like understanding the broader trend and knowing like when should I buy, when's a good time to buy, when's a good time to not buy. And you know, this is, to me, it's like a hack, right? And I always say, like, after our NFP days, you know, think about it in terms of have we seen the high or the low for the month? And this is just kind of like an overview of how does this session, or how does this system come to be? Why does it work the way that it works? What are the actual stats? I've said the stats before. 88% probability of being the high or the low for the month is the best stat that you'll ever find in technical analysis. But combining that with the fundamentals and what to do with it, like how to actually make money. I did this training. I do this training a lot, but to me, it's like it's a hack. It sounds crazy, but when you see it in action, you're like, oh my God, it's absolutely insane. So put options made me 90K. There you go. But yeah, that's what it is. It's usually about an hour or so. We might go a little bit longer. And we give away a ton of swag all the time. Whenever we do this, I'll get the budget this time from the crew. I feel like I've been going overboard. I'm trying to find my, I feel like I've been going overboard, but usually we give away, I want to say we give away too much, but we got sunglasses this time. Look at this. Here, the swag pack is showing up. So we got sunglasses. Oops. What is this? Sunglasses. Socks.
Oh, socks. I need the socks.
The socks have shown up. Some swag bags. I don't know, keychains, like whatever. We were supposed to have this earlier, but we didn't. But yeah, we have swag bags coming. I usually give away at least one scholarship to our academy. But look, if you're not into, if you're curious also about what a system looks like or what our trainings look like, show up and you will see. It is free. And those socks, yeah, I actually need a pair of those socks too. I don't have one yet.
All right, I love it. Next TT will be the day before NVIDIA next week. So it'll be an important one. And
yeah,
I don't know, Jason, over under that markets recover to where they were yesterday by next week, or more?
I feel like overs. I feel like overs. Yeah, I feel like overs. Like we get a little bit more dippy dip and then a little rippy rip. But you know, from there, who knows? And I just don't think it's over. I think it's way too early to call this whole AI thing over.
100%.
I think, yeah. Part of me feels like looking at the headlines today, it's like, you know, it felt like Citadel pumping the news flow with some more headlines so they can buy the dip again, quite frankly.
Yeah.
But we'll see. We shall see.
All right. Thank you all for being here. We'll be back tomorrow for the market open. We'll keep going from there. And Jason, thank you as always. For those that want to sign up for the webinar, it's September 7th. Links in the description. It's free to sign up. And we'll be back next week.
Cool.